This sell-off, as brutal as it seems, has actually been pretty orderly.
Wall Street's on its keister. Main Street seems to be doing a little bit better, although obviously some signs of stress.
Real wages are declining. So actually, real household income is going down.
We feel like the consumer is very, very stressed right now, and the U.S. economy lives and dies on its consumer.
Retail sales plus U.S. corporate earnings equals U.S. continues to outperform.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio. Alongside Tom Keene, I'm Jonathan Ferro. Together this week with Katie Lyons. Bramo out again on vacation. Futures positive 0.9% on the S&P, on the Nasdaq 100 up more than 1%. TK counting down to a big central bank decision later this week.
Well, two decisions. We have the ECB later this week and then on to the Fed 10 days from now, John. We see the Federal Reserve with 75 or 100 basis points. I think Greg Valliere brilliantly captures the weekend. I saw an article, John, on booming luxury sales. I saw an article on earnings are going to be okay, pretty good. As you know, equities have lifted here. The Dow up 254 points this morning. You know what, John? Greg Valliere looks at the rest of America, not with a fancy suit and bow tie, the collapse of confidence.
I've got good news for Wall Street, at least, Tom. Just a little bit. It's the Fed quiet period now. No more Fed speak. We're done. And it looks like 75, barring another Wall Street Journal article 2 days before the meeting. It looks like 75.
Yeah, there's no question about it. We tilt towards 75, and the stasis of the data check this morning, John, I think really shows that. I don't have anything wild I can talk about. Maybe oil with a little bit of elevation, so show some of that better feeling about earnings.
Kaylee pushing ahead to bank earnings. Goldman and Bank of America next on deck.
Yeah, and of course we're coming off of a monster rally for the banks on Friday after Citigroup and Wells Fargo results. I think Citi was up some 13% to end the week last week. The question really is going to be around those loan loss provisions, specifically for Bank of America. And then for Goldman, how well can they do on FICC trading, and what do those investment banking fees look like given the slowdown we have seen in deal making, and does the outlook for that improve in the back half of the year?
So we've learned, Kelly, that rate hikes are good for bank profits, but maybe not good for bank stocks so far this year. Is that the basic conclusion now?
That's been the story. It's been a catch-22 for these banks because on the one hand, rates are going higher. It helps with net interest income. That should be a good thing. But you also have a deeply inverted yield curve, concern around a recession because rates might go too high too fast, and that doesn't leave them in a great spot.
Recession on, recession off, Tom, seems to be the trade right now. Recession on, recession off. Does that get you excited for the week ahead?
No, it doesn't get me excited for the week.
Me either.
No, it doesn't. And the magnitude's a mystery, and the rest of it. I had the privilege of speaking with Lawrence Summers on Wall Street Week, John, on Friday, and I thought Larry was absolutely brilliant about the foolishness of gaming all this. The word recession is a forecast or guesstimate of a number of moving parts. You just got to get one of them wrong, John, to be wrong.
The labour market at the epicenter of some of those calls as well, Tom. Futures look like this Monday morning. Good morning to you. Up 0.9% on the S&P, and the Nasdaq 100 up a little more than 1 full percentage point. Last week down on the week, but a strong end to the week, a strong close to the week with a strong tilt into the financials. As Kelly mentioned, the bank's finishing really strongly in Friday's session. This morning, yields up by 5 basis points on a 10-year 296.14, and euro dollar just above 101. Katie, what a week ahead we've got for Europe.
It's going to be really, really interesting, especially exacerbated by the political turmoil in Italy. That's going to be what to watch on Wednesday. And how does the ECB keep control of the periphery if you have that kind of political crisis in one of those periphery countries? Of course, that's later on this week. As for what is ahead today, there are a number of things we'll be looking for, including before the bell. We already mentioned this, bank earnings, Bank of America at 6:45 a.m. Eastern, Goldman at 7:30. Can we continue the momentum we saw at week's end? What does those credit provisions look like for Bank of America and trading and investment banking revenue for Goldman? Then at 10 a.m. Eastern time, we'll get the National Association of Home Builders Housing Market Index. This could be interesting. We're expecting it to fall even further this month to 64 as you see that cooling in the housing market, a deterioration in sentiment potentially as you have buyers now worried about the economy and pricing, high pricing, putting a damper on sales. And then finally at 4 p.m. Eastern time, we're going to get tick flows for the month of May. So yes, there is a lag to this Treasury international capital data is about a 6-week lag, but still it could help explain demand for dollar-denominated assets, the movement of the dollar, and the Treasury buying from China could be particularly interesting. We're expecting that China's holding of U.S. debt could fall below $1 trillion for the first time since 2010, John.
Kelly Lines, thank you. My data point of the morning, Tom, the U.S. national average gasoline price has been down every single day since June 13th. And last week, commodities continue to get hammered. It wasn't just crude. Copper was down about 8% last week.
Let me link that into the economy, Gus. John, you mentioned recession. The fact is we still have inflation. It appears to be persistent inflation, which drives to high nominal GDP. And to me, the ultimate mystery, John, to get to Patrick Palfrey, is just simply what's the revenue line going to be? We don't have a clue.
Let's get to Patrick right now. Patrick Palfrey joins us, the senior equity strategist and co-head of quantitative research at Credit Suisse. Patrick, let's start here. The house view is much more constructive on earnings on Wall Street and beyond than the rest of the street. Can you just go through it? Why is that your view?
Well, John, I think as Tom alluded to a minute ago, I think the question is what happens with nominal GDP. And we measure corporate profits on a year-over-year basis. This year, nominal GDP is expected to be around 8% for 2022. That's a big number, and that's really what's supporting the revenue trends that we're seeing this current quarter. Right now, current revenue expectations point to growth of around 10%. And that's what's going to support revenue growth for the remainder of the year. And as long as inflation remains elevated, inflation represents companies' pricing power. So it ultimately helps propel the bottom line forward. So that's how we get to such strong revenue growth. I think the question is what happens to margins. And right now, many of these companies benefit from margins as they lever their fixed costs. Not every company, but across the benchmark in general, we see good margin leverage.
So what's the surprise, Patrick, 6 weeks, 8 weeks on earnings? What's the guesstimate you have of how we're all going to be surprised August 15th?
So I think as we look towards the end of earnings season, right now we're seeing EPS growth around 5%. We expect beats to come in at a very healthy level and expect EPS to finish around close to 10%. And I think what's important is there's groups in there that are problematic. Financials is an area where last year's reserve releases were cycling those. It's putting a difficult comp for the group. And if you took out financials, you would see a backdrop that is sitting around 13 to 14% on EPS growth. I mean, these are numbers that most investors would salivate over in normal times.
Well, on that point, Patrick, you're talking about earnings hanging in there. And of course, prices have come down. In theory, that could make a lot of these stocks a whole lot cheaper. Are valuations now at a point where they're attractive enough that we're going to start seeing re-entry? And where would that be?
Okay, so we started the year with a P of around 21.5. And what happened as inflation really became entrenched in the system and the expectation of Fed rate hikes really moved aggressively forward is we saw a lot of the valuation excess be removed from this process. And right now we're sitting with a PE around 16 times. That's incrementally above long-term averages, but not that far extended. And I think there's plenty of opportunities, particularly within cyclical names, because those are the ones that are seeing tremendous earnings growth, and they're actually derating because EPS are growing faster than what you're seeing with the price appreciation. So a lot of the valuation story has been corrected so far this year. I think the conversation for investors is whether or not we're going to head into a recession.
Patrick, at what point in the calendar would you and the team look around and say, you know what, we're wrong? How would you know?
We're wrong in terms of our EPS forecast. We feel completely comfortable with our EPS forecast. And if we look at our call, I mean, we took our call down. And I think the reflection of our call coming in was really the widening credit spreads, the macro volatility that's been priced into the system, and that valuation derating. The fundamental backdrop remains entirely intact. So the question becomes, as we move through the back half of the year, what do we get back? And we think credit spreads will ultimately come in, and we think some of this macro uncertainty won't fade, and that's really what's going to drive us higher towards our 4,300 target over the back half of the year.
Is there a distinction between profit-making, free cash flow generating companies and the rest? Is that going to be a great partition into 2023?
100%. I mean, what we see when we take a look at the factors, and factors is just a fancy way of regrouping stocks. And when you regroup stocks by profit making or margins, you're seeing companies with better margins, quality type companies, are actually swinging into favor over the past 6 to 8 weeks. That story was value led for the first 6 months of the year. So cheaper companies did better, more expensive companies got published on that valuation derating, which I mentioned earlier. But the focus now is on margins, is on quality, incrementally on growth. And that's where we encourage investors to look. A lot of that's taking place within cyclicals, but it doesn't have to. It can be within staples. It can be within healthcare. So look within groups for quality companies, particularly those with sound margins.
38.63 the close on Friday. Patrick and the team looking for 4,300 year end. Patrick, wonderful to catch up with you, sir, as always. Patrick Palfrey there of Credit Suisse. Pushing forward to a busy morning again. Bank of America earnings later this hour. Then on to 7:30 Eastern time. We should hear from Goldman. TK was pushing ahead to the ECB with Katie just moments ago. Got several messages. The BOJ this week too, Tom.
It is. It's out there, and importantly, over the weekend, it's in the research. The wonderful Seth Carpenter at Morgan Stanley with the Japanese team there, acclaimed because of Robbie Feldman, makes a very subtle shift. They will continue yield curve control, John, out into next year, out into Q2 of next year. John, to me, that's a huge deal from an incredibly informed house.
What I enjoyed about the work of Seth over the last week is just highlighting the differences between balance sheet policy, not just rate policy over the next 12 months or so, Tom. The balance sheet of the BOJ, they own 50% of the JGB market. And Seth and the team are essentially saying there's upside risk to that position.
And I think there's the politics of it, the political economics here, John. We don't emphasize enough the politics of Kuroda and, of course, off the terrible assassination of Abe, ever more complex, and the absolute lack of optionality and degrees of freedom Draghi, Lagarde have. What's Mr. Draghi doing this morning, John? Did you talk to him over the weekend?
I did not catch up with Mr. Draghi over the weekend, Tom. I wish I could.
I thought maybe you two were having a cocktail at Denelli there on the shores of Venice.
I would love to catch up on the Italian government as they're on the brink. I'd love to catch up on the ECB as well. I was about to make some snarky comment about the JGB market no longer being a market, but we'll see how much of a market we'll have in Italy.
You should have seen the photos Kaylee had from Denelli in Venice.
Oh, yes.
That room
what's Kaylee been up to?
Over to San Giorgio, whatever it's called, is great.
Is there something I don't know?
Yeah,
okay.
She did a remote there once.
Kaylee's going to tell me in a moment.
Tom has a wonderful
It's like Katharine Hepburn in that movie years ago. Kaylee fell in the canal.
We're at 1% on your S&P 500 this morning. Good morning to you all. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. A U.S. energy envoy is optimistic Gulf producers will increase oil output after President Joe Biden's visit to Saudi Arabia. Amos Hochstein told CBS he's confident there will be a few more steps in the coming weeks. Saudi officials say that any decision to pump more would be made within OPEC+, which holds its next meeting August the 3rd. The International Monetary Fund said it will cut its global economic outlook substantially in its next update. That came after G20 finance ministers and central bank governors ended their meeting in Bali without agreeing on a communique. The IMF already downgraded its outlook for growth expansion this year to 3.6% after Russia invaded Ukraine. In the UK, Sky News has cancelled the final debate between the Conservative Party candidates to succeed Prime Minister Boris Johnson. Sky said 2 of the 5, Rishi Sunak and Liz Truss, pulled out of the event. That's after last night's debate turned personal. Sunak accused Truss and Penny Mordaunt of socialism as he attacked their plans to cut taxes and borrow more. Conservative MPs vote today to eliminate one of the candidates. And a new report blasts the police response to the elementary school shooting in Uvalde, Texas. It says almost 400 law enforcement officials rushed to the scene, but poor decision-making resulted in more than an hour of chaos before the gunman was killed. 19 students and 2 teachers were killed in the attack. The report came from the Texas legislature. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
I'm doing all I can to increase the supply for the United States of America, which I expect to happen.
If there is a potential shortage, that we work on increasing crude oil production by Saudi with our OPEC partners and OPEC Plus partners.
We want to see more supply on the market. That matters because that helps depressurize it. It helps keep costs and prices down.
From New York City this morning, good morning with Tom Keene and Katie Lyons. I'm Jonathan Ferro. Counting you down some important central bank decisions with futures positive. 1 full percentage point on the S&P 500. On the Nasdaq 100, we're up by 1.2. Crude very much in focus. 99.25 on WTI, up by 1.7%. The president expecting, quote, Tom, further steps in the coming weeks on crude output from OPEC, potentially later in August.
That's the details of the trip. We'll have to see from here. I don't know. The fist bump thing, John really took front and center. We don't need to get into that. What we need to do is understand that in lieu of Scarlet Fu, to understand really what's going on with Ben Affleck and J-Lo, we've got to go to Anne-Marie Horton, social correspondent for Bloomberg Surveillance, also our chief Washington correspondent. And she joins us exhausted from a trip this morning. You know, Anne-Marie, I know you got to have a subscription to J-Lovers Club to get, the scoop on what's going on with the wedding. But what I really know is a J-Lover Club is really about Joe Manchin. Who's giving Joe Manchin love in Washington and the real J-Lovers Club?
He's not getting much love at all, Tom, and congratulations to J-Lo and Ben Affleck, but he's not getting any love at all right now in Washington, D.C. from his own party. But the fact that he is saying no, at least ahead of August, for a bigger package that would mean tax hikes and provisions to fight climate change does mean that Senator Mitch McConnell is likely going to allow the Republicans to sign up for the CHIPS Act, which would be a big deal for this administration. Remember, that is the bill that everyone in Washington is kind of coalescing around because it means you can combat China and has $52 billion for the semiconductor industry. But when it comes to his own party, what a welcome home from the president from this very tough trip from the Middle East. He's now seeing his economic agenda once again pushed back in Congress.
Walk me through what was agreed in Saudi and what we can expect in the coming weeks and months.
So there really was no agreement, especially when it comes to oil, at the actual meeting. But you do hear U.S. officials saying in the coming weeks. So that points you to August 3rd. That is when the next OPEC Plus meeting is going to be. But immediately after, Saudi officials, and I spoke to Adel Al-Jaber, who's a top Saudi diplomat, they poured cold water on it, saying they need to see the supply and demand dynamics. But also for Saudi Arabia, this is a difficult and delicate moment. If they're going to pump more oil, they have to get a number of groups on board with them. So no agreement for the president to take home immediately, but potentially in the coming weeks. But this does set a difficult stage. They want prices to come down as soon as possible. We're like under 4 months away from the midterm elections. If there's an agreement in August, then you'll start to see the oil in the fall, very close to November, if it was going to have any impact on gasoline prices.
Well, talking of November and the domestic audience, Anne-Marie, what has the reception been like at home to Biden's trip, and especially that fist bump with Mohammed bin Salman that Tom alluded to?
Listen, the optics have taken over the entire trip, and it has not been good. You have Senator Bernie Sanders going on ABC over the weekend saying no U.S. president should be going to Saudi Arabia for this type of government. Remember, President Biden tries to ostracize this individual, and then you have him giving a fist pump, having a meeting, a direct meeting with him. The working group did not involve the king. President Biden sat across from Crown Prince Mohammed bin Salman, which essentially legitimized him as the leader of this country, something the administration did not want to do. So it was a huge coup for the Saudis in terms of the geopolitics. And whether or not the president gets what he wants done, we're not going to know for a few weeks.
Is it a coup for the GOP? Would they have done anything different?
Well, President Trump went to Saudi on his first trip, and he got the full fanfare, right? He touched this orb with Sisi.
Yeah, he had the orb. He had the orb, just like J-Lo and Ben had.
Yeah, he did. He did the sword dance, which is very typical if you're a visitor in Saudi. So the fanfare was definitely toned down at the request of U.S. officials. They didn't want this pomp and circumstance. So they tried their hardest to tone it down and make sure this looked like what it was, a working meeting. This is the real politic of becoming president. Your optimism and your goals when you're campaigning does not meet the moment sometimes when you're in the White House.
What did Richard Haas say last week, Tom? Mugged by reality. I think the words he used last week. AMH back from a 12-hour flight and lands to talk about J-Lo and Ben Affleck. Anne-Marie, thank you. We appreciate it down in D.C. I'm shaking my head to AMH. We'll catch up later. TK, for President Trump, it wasn't him that said he would make this government a pariah. This president promised to deal with the king and not the crown prince. He said the crown prince, at least this government, the administration, the press secretary at the time said that the president would be dealing with his direct counterpart, which was the king, and that the crown prince was someone that Secretary Blinken should be dealing with. And a lot has changed. A lot has changed.
A lot has changed at $100 a barrel up to $124 there a cup of coffee ago. What's important to me looking at the royal family, John, is how far we are from the Robert Lacey books I read 30 years ago. I really can't remember. And we're just removed, not a special relationship that we had with Saudi Arabia, but certainly the history out of World War I and then out of World War II. We're beyond to something new.
The good news for this administration and the American people, arguably, is that gas prices have been coming down. We've talked about the average gas price in America coming down every single day since the middle of June. Tom, we saw that factor into UMich consumer inflation expectations as well on Friday. That came down too, in line with what's been happening with gas prices. And that really reinforced this idea we get a 75 basis point hike from this Fed and not 100.
Yeah.
The other part of this story, though, obviously, is recession risk climbs and inflation risk come down. We've got to deal with a different story, haven't we?
That's just worrying about summer, like, getting the kids started on their summer reading. That's proven to be as difficult a chore. What it says to me, John, and you mentioned this last week, John, it's this path down from 9% to what, and then what? And that then what, and when is the then what? Is to me the big mystery.
That was what was important about the print on Wednesday, the 9.1. And for me, Katie, it was never about 75 or 100 basis points at the July meeting. It was about whether you looked at that Wednesday print last week and thought there were reasons to believe this was sticky and there were upside risks to Fed funds in the second half of the year, or you just looked at that and said, this is the worst of it. We're done with this. Energy prices, commodity prices are coming in by risk. And some people did that.
Yeah, that's definitely what we saw in the rally at the end of the week last week, John. But to your point, it's really not about what they do in July or really the next series of meetings, what size hike. Is ultimately, has our assessment of what that terminal rate is likely to be changed, and how quickly thereafter from that peak rate do we start to see cuts coming in? Because as you have several shops on the street forecasting larger hikes this year, they're looking at cuts out in 2023.
Citigroup thinks we have to get a 4% first by year end. Some big numbers. Futures right now at 40. We're up more than 1% on the S&P 500. In the bond market, yields higher by 4 basis points, 295.77. From New York City, this is Bloomberg. Live from New York City this morning. Good morning. Moments away from Bank of America earnings. About an hour from now, you'll hear from Goldman too. Going into that, futures positive on the S&P 500, up by 39, up by a little more than 1%. On the Nasdaq 100, up by 1.2%. Alongside Katie Lyons and Tom Keene, I'm Jonathan Ferro. Bramo out of the building, but Bramo would want to tell you where the bond market is. This is where it is. 2s, 10s and 30s. Going into a Fed decision next week, not this week. Yields higher by 4 basis points, 295.77 on a 10-year, on a 2-year. Up by a couple of basis points, call it 314.73 on a 2-year note. And just to round things out in foreign exchange, big week ahead for the ECB, stuck between a rock and a hard place. And the Bank of Japan too. Dollar yen facing some dollar weakness this morning. Dollar yen back down by about 1/3 of 1%, 138.20. Euro dollar out by 0.8 of 1%, 101.63. And Tom, this ECB, this decision they've got to make this week, I do not envy them. I'm not sure there's a policymaker at the Bank of Japan, at the Federal Reserve, that envies the ECB's current position.
Yeah, and again, as I mentioned, it's politics first. How does the Bundesbank steer this? How does Madame Lagarde save face for all do this? What's it called, John? The fragmentation process?
The anti-fragmentation tool. If they've got a name, do they actually have a tool?
You were gone, John. You had like a 4-day trip or whatever.
Single day off, but sure,
carry
on.
But John, the Draghi thing is important. How does Draghi's turmoil affect Lagarde, John Ferro?
Here's the problem, Tom. If you get a change in Italian government and it shifts to one side to the other, whatever it is, if it's destabilizing the country and spreads widen, are spreads widening because of fundamental reasons or because of unwarranted reasons that the ECB considers it their role to come back in? I don't know about that, Tom, and I think they're in a really tough place.
We will see. We're going to dive into right now a half hour of mystery. Usually with most companies, Apple, whatever, it comes out like a Swiss watch. Within a minute maybe of each other, you get the earnings out. Bank of America, not so much. somewhere between now and then, they will come out with earnings. Shonali Basak waiting there, and Kaylee Lyons will dive into the analysis as well. Right now, to get us started, someone that knows Ken Lewis, he is Ken Leon, Equity Research Director at CFRA. Ken, I did the chart this morning of the 4 major banks normalized from the great financial crisis, and it's absolutely stunning, the debris that Brian Moynihan had to pick up. The 20-year track record of Bank of America is 2.1% per year. That was the debris that he picked up, and he picked it up and cut costs. Is he in a point now where he's going to cut costs again?
I think it's 2 steps. First is to see if there's any further weakening of loan activity, and expenses have been rising because of technology. But Tom, you're right. If we do see further weakness in the capital markets, I think by September, October, the bank's going to have to look at whether they have too many people in terms of investment banking. I don't think we'll hear that today, but it's clearly on their minds for the back part of the year.
Ken, you and I know the calendar on this. We've enjoyed it ourselves, which is you frame up February bonuses in the distant dark of the 4th week of September. Is all that going to be moved forward this year?
I think they're going to all do their work in probably August to decide if we continue to see investment banking fees down 60, 65% for the year, as we did see for the first half of this year, then obviously you don't need a large machine in terms of equity underwriting, in particular IPOs.
Ken, we know that rate hikes are good for net interest income. We've seen that in the numbers so far. At this stage of the cycle, are rate hikes good for bank stocks? Not bank profitability, bank profits, but bank stocks.
They're still good because it's benefiting widening spreads and higher net interest income. But really, to drive the best case for banks is not only the higher rates, but higher volumes. And unfortunately, what we saw from last week and probably today for Bank of America is some easing on consumer loan activity. But we're not in the dark days yet. And that would be where there's a significant rise in terms of provision for loan losses. It's going to ease there because the bank credit risk committees can only book what they see today. So it's a real indicator. It's not a forward indicator.
Is that enough to lift any of these names? Ken, I'm seeing JP Morgan still down on the year by 28, 29 percentage points.
It seems, as we saw with Citigroup up 13, 14% last Friday, is that any glimpse of positive news, even if the trend seems to be still uncertain or negative, will move the stocks because they're trading at ridiculously low 52-week lows and low price to net tangible book value, especially Bank of America. And I think today's story with Bank of America is that this is a premier bank and certainly should show better metrics than a Citigroup or a Wells Fargo.
Do you expect Bank of America is going to follow Citi and JP Morgan with pausing share buybacks, Ken?
They're going to have to, because unfortunately, we didn't get enough press with the Fed bank stress tests. And unfortunately, the capital buffer has to be widened for Bank of America. So I suspect they'll softly talk about maybe holding off buybacks for now, maybe look at it in another 3 months or so. But they're going to have to do that. It really wasn't, a blockbuster year for the Fed stress test. It's still good because the dividends for many of them are going higher. And the yields for these stocks are at 3.5%, 4%.
Okay, so if they need higher capital buffers for potentially more stressful scenarios, Ken, what is your read through based on the results we've already seen on the actual health of the economy and the consumer? Because executives seem to think it's still sunny for now, even if, those hurricane winds are out there somewhere for Jamie Dimon.
Yeah, so first of all, on the stress test, it's actually Alice in Wonderland. We're talking about 10 to 14% unemployment rate. So, essentially it's a dance the Fed does with the banks because of what Tom said, the financial crisis. You go to reality today, it's really, I don't think the banking industry is going to have lower loan activity in the second half of this year versus the first half. And then we have to play the recession scenarios for 2023. But if they start building reserves in the second half of this year, that could be good fodder for earnings push-ups in 2023. That's exactly what happened in in 2021 versus 2020.
If you're just joining us, Kenneth Leon was with us with CFRA. We await the earnings of Bank of America, sometimes a mystery when they come out. I'm going to guess 8 minutes, but it could be sooner. I believe Goldman Sachs later today as well. Mr. Leon, we're privileged, will join us at that time as well. We welcome all of you on Bloomberg Radio and Bloomberg Television, and especially Global Wall Street. Ken Leon, there are two stunning ways to compare J.P. Morgan and Bank of America. I want to go through this quickly here. One is on book value, where there's always a premium to J.P. Morgan, and I don't think Moynihan's had enough credit for pulling Bank of America up above book to 1.09 off the BQ screen. The other's rate of return over 20 years. As I mentioned, Bank of America's been a real laggard, 2% something per year versus JP Morgan's relative excellence of 11% per year. Right now, Ken Leon, what is a differentiator for the senior management of Bank of America as they compete with Fortress Diamond?
It's really investment in digital banking and making the right calls in terms of expanding particularly your consumer business. I don't think it's the capital markets, and I think it's more history and emotional bias that JP Morgan's a better bank. It's trading at a much higher, as you've noted, price to book. And, again, when you look at Bank of America, especially in the last 3-4 years, they've really upgraded their platform. So they are well ahead of the Wells Fargo's, but I don't see any reason that there should be such a wide difference between a Bank of America and JP Morgan, which is why we have a buy in Bank of America and a hold on JP Morgan. It's hard to continue to exceed expectations when you're so optimized as JP Morgan has been.
Ken, awesome to catch up. Stay close, as always. Ken Leon there of CFRA. TK, keep the BQ screen up and just enter in where you had the likes of JP Morgan, CSGN, space SW equity, and have a look at Credit Suisse. And then do the same with DBK, GY. Have a look at that too, Tom. It is not good in Europe.
They're not equivalent. They're not apples and oranges, but they're certainly not apples and apples. They're maybe Macintosh and those ones I hate. The red delicious ones. I hate those apples. But John, I'm sorry, 0.31 on Credit Suisse, and this is extraordinary. I spoke with Greg Fleming on Friday with the Rockefeller Foundation on Wall Street Week, John, and he was scathing about the banks that have stumbled and have just become zombie banks. Is Credit Suisse a zombie bank? And again, to Moynihan's great credit with his team and what they inherited, John, it's amazing how Bank of America's gotten back to book.
Outside of Switzerland, in Europe on the mainland, Tom, they've waited 11 years for a rate hike. They've waited 8 years to get away from negative interest rates.
To me, it's all cultural.
We're finally getting that, but ultimately we're doing that into real economic weakness potentially for this economy.
And as I said, what's a differentiator? What's a differentiator of Barclays? What's a differentiator of, the mess that ABN AMRO became? I can't remember, frankly, what the details are. What's a differentiator of a regional bank in the United States, John? With digital banking, this is a huge issue. JP Morgan up 11% on mobile customers.
They've got to keep spending to make that transition, Tom. You know it.
Yeah, the spending is everything. I mean, and they're going to go the way of E.F. Hutton if they can't get it done. John, E.F. Hutton was a small shop a few years ago.
How many years ago?
That was a few years ago.
Just a few years ago.
John,
how many branches do they need to close, Tom? We still ask that question too, don't we?
Yeah. John, when I was
big numbers.
When I was a kid, the exchange was open Saturday, and Grandpa would take me down.
Used to go in.
And they had the paper tape with the old guy, the old geezer, with the tape going through his hand and the cigars and the spittoons and the whole thing and the sawdust on the floor.
That sounds very cool.
It was very good. The Dow Jones Industrial Average was the only thing anyone quoted.
And people quoted the Dow. I get that. That makes sense.
Futures up 271.
100 years later, we quote the S&P.
we still quote the Dow, up 272.
From New York City. I love you, Tom. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Russia's defense minister has ordered part of his forces to focus on destroying Ukraine's long-range missile and artillery systems. It's not clear how much of a change this represents. Russian troops have been trying for months to destroy Ukrainian weapons. Meanwhile, the US and its allies have stepped arms shipments to Ukraine. Swedish fashion retailer H&M has decided to wind down its operations in Russia. The company halted all sales there in March after Russia's attack on Ukraine. H&M will reopen its Russian stores for a limited time to sell remaining inventory. It expects to book costs of $190 million. And in Italy, there are signs that the biggest political forces are preparing for snap elections after Prime Minister Mario Draghi announced his resignation. The two centre-right parties, Forza Italia and the League, ruled out the possibility of remaining in the governing coalition. Draghi said he would resign after another party, Five Star, failed to support the government in a confidence vote. And in China, the number of daily new coronavirus cases is staying above 500. The city of Shanghai reported fewer cases on Sunday as it rolled out mass testing in 9 districts. Meanwhile, the gambling enclave of Macau has extended its lockdown. And the UK is bracing for a heat wave this week. Temperatures in London and the south of England might hit a record-settling 40 degrees Celsius, 140 degrees Fahrenheit, that is. That's hotter than the forecast in Madrid, Rome or Marseille. All of the UK's 10 warmest years have occurred since 2002. Global News 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Bank of America numbers just pouring out, basically in line. I'll go through the headlines briefly for you. Investment banking revenue coming in at $1.13 billion. The estimate 1.31. That was the miss, in line basically everywhere else, including on trading revenue. Taking a look at that, let's get to Shonali Bassett for more. Hey, Shonali.
The question here, John, is in line enough in a quarter like this? You are seeing some very clear positive signs. For example, the provisions for loan losses are coming in less than Wall Street expected, which is a future sign of the health of the consumer as well. You also have efficiency a little higher than expected. Remember, we were expecting Bank of America to take similar charges related to regulatory matters as the other banks. But remember, 67% efficiency ratio for Bank of America compares to 59% over at JP Morgan. When you talk to Tom and ask him about what the difference is here, is Bank of America is a little less efficient than JP Morgan. We have Bank of America heading into these earnings trading just about book value. You had that big run up on Friday, and so you're seeing the stock react negatively today for results that are pretty much just in line with expectations everywhere else.
Shonali, I give them the highest marks for just a beautiful PowerPoint that's just brilliantly clear, and I give him great credit for the courage to go back to the great financial crisis. This is not the bank of 2009, and you see it in the loan mix. The chart is really telling where consumer loans go from 67% down to 44%. This is not the bank we perceive, is it?
It's not the bank of 2008, that's for sure. And the question now is, how do they become the bank of the next 5 or 6 years, when what people are really worried about, what investors are concerned about, is the next 24 months. The question of investment is so important here because you have Bank of America inking 21% of the share of global M&A volumes at a time when M&A is down significantly. That makes them a contender this year. And so the question of whether they're going to pull back on investment bankers this year in a tough market is a very tough question. I anticipate that you'll hear CEO Brian Moynihan talk about that need to invest through the tough cycles here because investors are going to want them to have some prudence.
John, we had that conversation with Brian Moynihan. What a bank geek. I mean, we didn't do any of the macro blather with him. What's the Fed going to do? We talked about the inside stuff that's shown in these charts. He's a total bank nerd.
Did you call him that when you spoke to him?
I did. Moynihan's a total bank nerd.
That's how you introduced him. TK, thanks for that. Yeah. Kaylee, how many times have we seen consumer resilient in a bank statement from these guys on Wall Street?
Yeah, the C-suite sounding really optimistic, and Brian Moynihan is no exception in the statement, saying our U.S. consumer clients remain resilient, continued strong deposit balances and spending levels. And Shonali, taking a look at these credit loss provisions, lighter than expected, just $523 million. The estimate was for closer to $605 million.
Yeah, and that, again, is a good sign. Not only are the provisions less than expected, so are the charge-offs. And so you're not seeing the loans go bad. You're also seeing, Kaylee, a beat on net interest income. That is the most important line, obviously, for Bank of America. And not only just a jump higher in net interest income, but also that net interest yield just ticking higher in a way that you would want to see in the face of higher interest rates, but also an inverted yield curve. So right now, the signs are pretty clear for Bank of America. The question is it enough for investors at a time where they're still worried about a recession and they're still worried about some of these other declining businesses here when the other half of the ship, the investment banking and corporate side of the ship, is also under pressure?
Shanali, awesome to catch up. Stay close, won't you? Shanali back with us in about 40 minutes' time when we get Goldman numbers a little bit later this morning. Bank of America in the pre-market, Tom, just a bit softer. Nothing big here. We're negative 1.7% in the aftermath of those results.
Yeah, there's no question about it. And I think, John, to me, what's interesting here is what's the expense path going to be forward. I mean, we're already seeing that, John. Don't you agree that Larry Fink was out, I think it was on Friday, talking about not a hiring freeze, but just really tightening things
That's
up.
where it starts, Tom. Hiring intentions.
Yeah.
And then it goes to cuts. How quickly it moves in that direction remains to be seen.
Ken Leon with us right now. Ken, what do you see here in net charge-offs, consumer and commercial? I don't know if you've had time to look at that, but is there a story here we're missing?
I think the story is they can't really see into the second half of this year. The banks are very conservative on provisions. It's either a strong statement that we're going to have a soft landing assumption or a very shallow recession that's also short, or we're going to see more significant increase. I did look at provision for loan losses over the last 4 or 6 quarters, and it's come steeply down starting in the first quarter of this year off of the sugar high they had of the loan loss reversals. So I don't think we're getting the story from these banks for the second quarter on what lies ahead in the second half of this year and certainly recession in 2023. We are not getting that story.
Okay, so maybe a murkier forward outlook. Is that why we're seeing the shares down 2%, Ken, on what looks like a pretty solid print overall, aside from that miss slightly on revenue?
It is, because if you poll all the bank analysts, Bank of America would be your favorite of a bull case scenario, which I liked and favor, which was rising rates and higher loan activity. Both were good, but as we heard from Shanali, it's more modest volumes. So I think it's just an okay result, not one where we're going to see it move the needle one way or the other. And then many times, as Tom mentions, you know, we get Brian Moynihan on the call here on just beautiful execution on large businesses and consumer and commercial banking. I think we might see some pickup. But again, the second quarter is really not looking into the crystal ball of what might lie ahead for the next 6 to 12 months. And that's because credit risk committees are mostly looking at the real environment or just or what happened in the last 3 months.
Ken, awesome to get your reaction in real time off the back of these numbers. Ken Leon there of CFRA. He's going to be back with us a little bit later this morning following Goldman numbers. It's David Solomon, Tom, and Goldman up next.
It is, and it's a very different story. I really take issue with people that lump them all together. I think each story is different, and each story has a different clarity as we immediately look at the data. With Goldman Sachs off of Sri Natarajan's wonderful effort, I think it was 10 days, John, maybe 2 weeks ago, I am absolutely fascinated how Goldman Sachs positions their retail bank experiment.
Are you not in Marcus, Tom? Is that what you're trying to suggest?
I just wonder.
I thought perhaps the cash position would have come over, no?
The quarter where they really start to say, okay, here's what we're going to do.
Are you expecting that this morning?
I don't know if it's this morning or maybe it's next quarter, even a year-end kind of cleanup thing, but I'm just fascinated by a well-intentioned effort to go into retail and the idea that we're patient, we're going to wait.
You're very diplomatic this morning, Tom. A well-intentioned effort.
I feel diplomatic.
And we're patient. You don't sound that patient, though, at the best of times.
Yeah.
Okay. Should I hit the market?
Diplomatic. Yeah, please.
Sure. Futures up 9/10 on the S&P, bouncing back. Nice decent end to the week last week, too. Why? You Mitch. This is what it's come down to for the Federal Reserve. Consumer inflation expectations in the University of Michigan Sentiment Survey. They came in off the back of what's happened with gasoline prices, and ultimately that sets us up for a 75 basis point hike, Tom, at this Fed
John.
next week, and not 100 basis points.
Negative 21 curve inversion, that really gets my attention. And notice, John, the real yield, and on the show on Friday on the real yield, they did note how it has come in from a 0.6x to a positive 0.57.
Did you do the show on Friday?
No, I
or did
was
Bramo?
going to do it, but, you know, I mean,
Bramo took over.
I was doing my Frankfurt ECB practice lunch.
Really?
Yeah.
How did that work out?
3 hours.
Nice. From New York, very European, Tom. This is Bloomberg.
This sell-off, as brutal as it seems, has actually been pretty orderly.
Wall Street's on its keister. Main Street seems to be doing a little bit better, although obviously some signs of stress.
Real wages are declining. So actually, real household income is going down.
We feel like the consumer is very, very stressed right now, and the U.S. economy lives and dies on its consumer.
Retail sales plus US corporate earnings equals US continues to outperform.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene. I'm Jonathan Ferro, together with Katie Lyons. Bramo out for the week. Futures up 0.9% on the S&P 500. On the Nasdaq 100 up by 1.12%. A little bit earlier, about 10 minutes ago, Bank of America earnings. Coming up next, Tom, it's Goldman.
Yeah, correlated in here, and maybe it's Goldman Sachs telling us it'll be a better quarter ahead here, John, and we're going to hear from J.P. Morgan here in a moment. What it is green on the screen, and John, it started in the Asia morning, and it's a very nice lift to the market, correlated. Even Bitcoin goes 20 up to 22,000.
Pushing ahead, Tom, to the ECB and the Bank of Japan, and then next week the Federal Reserve. Conclusion now is after the University of Michigan's Consumer Sentiment Survey data on Friday is that rate hike will be 75 and not 100.
Yeah, I'll go with the 75, John. I don't know what to make of the ECB meeting. I think it's hugely anticipated by economic wonks. I mean, what is she going to say that's going to change the dialogue around, frankly, a brutal war in Ukraine and now the overlay of horrific weather?
Tom, I would ask the question for people following European markets, what's the most important aspect of Thursday, the ECB or Nord Stream 1 coming back online, and how much gas is going to flow through it?
Yeah, I'll go with that. I don't pretend to be expert on it, but certainly we're seeing it in the price of coal, the price of gas there. And for our American listeners and viewers, the distinction, John, between the confidence tone of Europe versus the confidence tone of America, I think they're really stark.
Yeah, let's just say, Kaylee, that what you're hearing from the bank executives about the strength of the consumer, the strength and resilience of the U.S. economy, perhaps not shared by their European counterparts.
Yeah, and the gas story obviously is crucial because you have serious recession fear in Europe already, a serious cost of living crisis. And that's the difference between Europe and the U.S., John, is that here in the U.S., clearly inflation has mostly been driven by high demand, the resilient U.S. consumer. In Europe, it's a lot of energy, and the ECB isn't necessarily in a position to do anything about it. And yes, as we talk about the ECB hiking, they're hiking into material economic weakness. So how many hikes are they even going to be able to deliver? That's my question.
The other big difference as well is that this morning in New York City, it is pouring with rain.
Yeah.
What do you make of that, Tom? And over in London, they have a heat wave. Now, typically I would joke about London and their so-called heat waves, and I would call it summer. But ultimately, Tom, this is a hot, hot one in the city of London today.
Well, yeah, in Europe, and of course, as Matt Miller mentioned earlier, out in Texas, I think grim is the right word as well, John, and it goes to climate change. And what I would emphasize, certainly what we've seen with the war, is climate change has flat out been pushed aside. And you see it in coal in Australia, in Newcastle, and in Rotterdam in Europe.
I would emphasize a lack of aircon in housing in the city, Tom, across the UK for that matter as well. It's going to be problematic through the next couple of days.
Yeah, we have air conditioning at Queen Victoria Street, so
we do.
You and
that's
visit
the good
next
news.
Week,
Let's come to the office. Come into the office and don't work from home. Is that the message, Tom?
Yeah, I think
maybe.
So.
Futures up 0.9 on the S&P 500. On the Nasdaq 100, we look a little something like this, up 1 percentage point. In the bond market, yields higher by 4 basis points to 295.22. This is what risk on looks like, isn't it? Dollar weaker, euro dollar 101.52, positive 0.7%. A euro that's stronger. Everything's strong against the dollar in G10 today. Crude 99.34, Kaylee up 1.8%.
Yeah, so gains in oil prices isn't necessarily something the Biden administration likely wants to see after that trip to Saudi Arabia. Really, it's all going to come down to August 3rd and that OPEC Plus decision. But that's still a few weeks away. Let's get through what's happening on this Monday first. Of course, we already got Bank of America results about 15, 20 minutes ago. Goldman Sachs is on deck just about 25 minutes from now. We have heard bank after bank talking about the strength of the consumer, the strength of the economy. How much will David Solomon echo those views, and what is it looking like when it comes to the trading revenue revenue and investment banking picture. Then at 10 a.m. Eastern Time, we'll get the National Association of Home Builders Housing Market Index for the month of July. We're expecting it to fall further to 64 as you see a cooling in the housing market and the impact of higher rates really starting to bite. And then finally at 4 p.m. Eastern, we'll get Treasury international capital flows data. Those tick flows could be really, really interesting, helping us understand the behavior of the dollar in recent months, and then also just demand in general for dollar-denominated assets. Of course, there is a bit of a lag. This data is about 6 weeks old. It's from the month of May, but still, China could be really interesting. We're expecting Chinese Treasury holdings to fall below $1 trillion for the first time in 12 years, John.
Kelly, thank you. As Kelly mentioned, in the next hour, Goldman earnings should be about 25 minutes away. Joining us now is Phil Camporelli, Portfolio Manager at JP Morgan Asset Management. Phil, I hate this question, but we have to ask it. Is bad news good news in this market?
Well, if you look at the economic data that we've gotten so far, John, and most recently, if you look at something like retail sales from Friday or the June payrolls number, you would think this is just an all-time environment to take risk. The problem is, John, we have a 9+ inflation CPI numbers last print as well. And that strong data that I just mentioned, John, which was good news for the economy, is actually bad news if you're thinking about what that means for the Federal Reserve. This opens their window to continue to be very aggressive, John. So on the flip side, this is the worst year that we've ever seen for fixed income. John, that's not hyperbole. The worst year ever for the Bloomberg aggregate index was 2.9% in 1994. And if you talk to old bond people about 1994, they go cross-eyed. The ag is down over 10% right now. So this relentless uncertainty about how aggressive the Fed is going to be, moving by 75 basis points, really no end in sight in inflation rolling over, is something that has caused interest rate volatility to jump 70% from last year, which of course leads equity vol. Last time I was on here, I made Tom crazy because I compared, the 10-year Treasury to Reggie Jackson and all that stuff. It's the straw that stirs the drink. But that stuff has to slow in order for folks to feel a little bit more comfortable about equities. And that's the reason why we're a little underweight right now, John.
This is a joy. You have the most prestigious accounting degrees in America. The Axis out of Fordham, led by Dominic Salvatore of years ago. He was a giant. We all studied Dominic Salvatore, whether it was a director through the Shams outlines. I want you to account right now for an inflated revenue stream. As you asset allocate, how do you treat revenue stream that's not organic revenue growth 4 or 5%, but is this goofy thing of real growth plus ginormous inflation on top of it?
Yeah, and that's what makes it look misleading, Tom. I mean, if you were to just look at what the nominal rate of revenue streams is, again, it would point to something that looks like it's very risk on. But as you said, it's inflated here, Tom. So, the inflation story for us, maybe it peaked in June, maybe. But at the end of the day, the fact that the Federal Reserve, Tom, is going rapidly through neutral, which was the hope earlier this year. Maybe they'd stop at about 3% on the federal funds rate, but they're moving rapidly through neutral into restrictive. As you mentioned, the yield curve is inverting pretty significantly, which puts the crosshairs on growth. And again, that leads us to be a little bit more underweight on risk. However, we are pounding our fist on diversification right now, Tom. Do you realize that the 60-40, which is every day I wake up and I try to beat the 60-40 as an asset allocator, the 60-40 this year is down over 10%. That's very rare. It's only happened 15 times since World War II. But here's the punchline. Every other time the 60-40 was down 10%, the following 12-month return was averaged positive 18. So that's really important for us right now as asset allocators.
So, Phil, is essentially what you're saying, if you don't want to buy risk assets like equities here, it is time to buy bonds.
Yeah, so it's an asset allocation decision, Kaylee. So we believe that what occurred this year, which is nowhere to hide, Barclays at Bloomberg aggregate down over 10%, those days, we think, are behind us. And from an asset allocation portfolio construction decision, Kaylee, even though we're not as bullish on equities just yet because of the uncertainty around, future interest rate hikes, bonds will provide diversification. And that's something that we're really, really clear on with clients, despite what has happened in the first 7 months of this year, Kaylee, which is very, very unusual.
A listener called TJ would like a comment on Red Sox Yankees, Phil. You got a final word on that?
No contest. I'll leave it at that.
TK, you've got a final word on that one.
It happens
Silence.
every summer. That was a movie a few years ago. And once again, we see can you comment on the fact, I don't know if you can hear this worldwide on radio and television, but we're in the middle of a massive thunderstorm. The thunder and lightning, John, generated this morning from 270 Park Avenue.
Is that right? Is that the new building or the one
They're
across
building
the
a new
road?
building. They're so J.P. Morgan. I think they're building them like on the same.
Have you seen that structure going up on Park, Tom? How big that is?
Yeah.
It's absolutely massive. Phil, thank you.
I hope I make it that long, Tom.
So does Mr. Diamond, so you're in good company.
Phil Camproni there of J.P. Morgan Asset Management. Real thunder and lightning. You can really feel it shake this morning, this building. Futures up by 1% on the S&P, on the Nasdaq 100 up by 1.2. Counting you down to Goldman earnings, Tom, about 20 minutes away.
And very different from Bank of America and what we saw from Fortress Diamond here a few days ago. It's going to be, Chanel's going to go through it. Ken Leon's going to stop by as well, John. But it's just always an original story. And what I find fascinating is where Gorman has really gone to wealth management. What is J.P. Morgan going to? And my answer is maybe they're the bank least changed.
And then we can move on from the financials, Tom, and talk about big tech. The day after the Fed next week, Thursday, it's Apple's turn.
Any guess?
Things start picking up quickly.
I haven't read Suva. I think does a great job here, and Dan Ives and the rest of them. I really haven't read it other than what are they going to do? Stop generating cash? I don't think so.
Well, we know the aggregate consumer numbers, and the banks are talking to us about them. They're talking about that consumer resilience, how much savings there are. They're not indebted like they used to be. Leverage is lower than it used to be on both the corporate and consumer balance sheets. We know all that stuff. I want a real insight into what's happening, Katie, with spending right now, and we're looking to tech for that, to Apple specifically.
Anne-Marie brought me back Mango Tang. I just don't like it.
Mango Tang.
Mango Tang. It's like un-American.
I wanted a sensible comment from Kaylee on tech earnings next week with Apple and the consumer side of things and CapEx and software spending and all of that good stuff, Tom. And
we don't know. Kaylee, do we know? The answer is we don't know.
We'll find out.
There we go. Futures at 1%.
Trenchant
Kaylee's
analysis.
done this before, hasn't she? She knows. I'm sorry, Kaylee. Nasdaq futures up by 1.2% from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. A U.S. energy envoy is optimistic Gulf producers will increase oil output after President Joe Biden's visit to Saudi Arabia. Amos Hochstein told CBS he's confident there will be a few more steps in the coming weeks. Saudi officials say that any decision to pump more would be made within OPEC+, which holds its next meeting August the 3rd. In the UK, Sky News has cancelled the final debate between the Conservative Party candidates to succeed Prime Minister Boris Johnson. Sky said 2 of the 5, Rishi Sunak and Liz Truss, pulled out of the event. That's after last night's debate turned personal. Sunak accused Truss and Penny Mordaunt of socialism as he attacked their plans to cut taxes and borrow more. Conservative MPs vote today to eliminate one of the candidates. And the International Monetary Fund said it will cut its global economic outlook substantially in its next update. That came after G20 finance ministers and central bank governors ended their meeting in Bali without agreeing on a communique. The IMF already downgraded its outlook for growth expansion this year to 3.6%. That's after Russia invaded Ukraine. And Boeing has fired its opening shot at the Farnborough International Air Show outside London. It announced that Delta Airlines will buy 100 of its 737 MAX 10 jetliners. The deal has a value of $17.6 billion, although there are usually steep discounts on big orders. Boeing's rival Airbus also expects to announce some big orders. Farnborough is the first large-scale gathering of aviation industry leaders in 3 years. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
OPEC Plus made a major shift in its policies, recognizing that since Putin started amassing forces, the markets have been affected and that there was a supply-demand issue, and announced increases in supply of 50% for July and August.
Right.
And based on what we heard on the trip, I'm pretty confident that we'll see a few more steps in the coming weeks.
One of the sharpest minds on energy in the administration, that was Amos Hochstein there, the US State Department's senior advisor for energy security on CBS. From New York City this morning, good morning. In about 12 minutes' time, we'll have numbers from Goldman, hopefully. We'll have numbers from Goldman in 12 minutes' time. Going into that, futures are positive by 1 full percentage point. The bounce continues for now on the Nasdaq, up by 1.2%. Yields higher by, let's call it 3 basis points to 295. Some dollar weakness out there into the ECB and BOJ on Thursday, into the Fed next Wednesday. And Tom Crude, 99.46, up by 1.9%.
Yeah, oil with a bit of a move there up, but I'm going to call it a quiescent tape. I really want to point out curve inversion. Good morning, Priya Misra. John, negative 20 basis points. The difference in yield between the 10-year and the 2-year getting out to a quarter of a basis point. Again, any breakdown there would be stunning. I'm not
a lot of that,
predicting
Tom,
but, you know.
I'm with you. A lot of that came last week from a 10-year that rallied.
Yeah.
Yield to lower.
Yeah. And then remember, folks, you got 4 outcomes with 2 yields, so it gets a little complicated. Always complicated American politics is the great thing I get wrong, you get wrong, Anne-Marie Horton gets wrong. We look at Arizona as a quaint little place with 2 or 3 congressional districts. And, of course, with Phoenix, it has exploded. Anne-Marie Horton, I'm absolutely fascinated by the Greg Giroux work and also in the Washington Post this morning of Pence and Trump out in Arizona trying to find the next Republican Party. Phoenix is not the Phoenix we grew up with.
No, it's certainly not. Arizona is purple, right? And you have a ton of companies also coming in that bring a lot of on the socioeconomic level, a lot of higher educated individuals, and it is starting to move left. We've seen that over the course of the last 8 or 10 years or so, and that is why the Republican Party is out and about trying to make sure they can shore up some of their right-wing base there ahead of November, and then, of course, ahead of 2024, because that's really where Trump and Pence are looking at.
The great unknown here is the black and I know so many people upset by the 8 flavors of Latino, Latinx, Latino this, Latino that. How are the two parties going to deal with the critical part of the Arizona public?
It's a great question because you will have a lot of individuals in that community that do not like this label. And there was a recent episode from the First Lady, Jill Biden, when she was talking to a group of Latinos and talked about how they're as diverse as breakfast burritos. That got a ton of pushback. You can see each side trying to make sure they are shoring up this massive voting base. And depending on who you're talking to, is it really breaking through? Not so sure.
Well, obviously, it is all in the run-up to those midterm elections in November. And the biggest problem dogging the Democrats, and more specifically the Biden administration, is inflation, hence why he has been so visible in trying to do something about reining in oil and gasoline prices. Anne-Marie, how successful was his trip to Saudi Arabia in terms of echoing and resonating with the U.S. public, and for that matter, with his own party?
Well, as he comes home to the White House, I think many would say that he's coming home empty-handed. There was a few wins in terms of overflights, islands that U.S. peacekeeping troops will now depart and the Saudis will be able to develop. And then you have U.S. officials like Amos Hochstein there saying that they do believe there will be certain steps taken in the next few weeks, i.e. what happens at the OPEC Plus meeting. But immediately after the president and U.S. officials said this, Saudi officials have said this publicly, as well as interviews with myself, that it depends on supply and demand. And there was no clear-cut, firm decision that they would come to the president's rescue. So when it comes to oil, I think it will be a few weeks until you see whether or not this trip was a clear win for the president in terms of bringing down oil prices and then thus gas prices.
And we have to have a conversation about contradictions here, Anne-Marie, because, of course, the president goes to Saudi Arabia, fist pumps Mohammed bin Salman after talking on the campaign trail about pariah status. At the same time, also pushing more fossil fuels when he wanted to be a climate president coming in. And it looks like that climate agenda, in terms of the legislature, isn't something that Joe Manchin is going to let through.
There's the ambition of a campaign trail, then there's the realities of entering the White House. And this is the real politic that President Biden is facing on so many fronts. His foreign policy is having to change because of domestic issues at home, whether or not it's going to the kingdom and asking for more oil, whether or not it's potentially they may lift some of those tariffs on China. The fact that they are asking U.S. producers asking global producers to pump more oil. At the same time, they are trying to bring down the use of fossil fuels. This is the fact of the matter. And right now, Kaylee, what you're bringing up is they're not going to be able to get in, even so, those provisions about fighting climate change in a bill, because their own senator and their own party will not go forward with it. And Senator Manchin, which in closed circles is called President Manchin because he holds so much power, they need him in order to get this done. It doesn't look like it's happening.
Mugged by reality. Said it last hour and we're saying it again. Anne-Marie, that's like the White House this time, Tom. Anne-Marie Holden does not stop. Anne-Marie, great work in the last week. I followed much of it. Thank you for that.
It was okay.
It was wonderful, Tom. Wonderful just to follow the president through the Middle East. A real historical moment as well. Historic moment for this president, Tom.
And John, what's so important is it wasn't just the Middle East. This guy's been on the road. I mean, Bavaria, Madrid, Saudi. There was talk that he only came back from Saudi just to rest, which clearly any president deserves to do. Where to next, John, I guess is the big question.
Where to right now? Goldman Sachs earnings, Tom. Trading revenue coming in at $6.47 billion. Sales and trading on the equity side of things coming in at 2.86, the estimate 2.71. Fixed sales and trading revenue 3.61 billion, the estimate 3.11. Tom, just going through some of these numbers. Investment banking revenue coming in at 1.79 billion, the estimate 1.88. So Goldman coming in on the IB side of things, Tom, just a little bit lighter than expected there.
Yeah, I'm going to, there's any number of ways to do this. I've got book value year-to-date growth up 6.2%, which is really not shabby. They sell it up top. Resilient. That's the important word now, John.
Resilient.
All of a sudden, resilient. If you don't say resilient, you can't play. Resilient first half performance is what they call it.
FICC and equities looking good, though. Investment banking just softer relative to expectations. The stock up by 1.73%, Tom, in the pre-market.
Critical. Increased quarterly dividend by 25% to $2.80 per common share Q3 of this year. And again, this is this use of cash development. And again, the reaffirmation of confidence that they have a business forward under any uncertainty.
So trading revenue is a beat. Investment banking revenue comes in a little bit lighter than expected. I'll guide you through the next 30 minutes. We'll catch up with Sonali Basak in about 5 minutes' time. Then we'll get some reaction to these bank numbers from Ken Leon of CFRA as well. Goldman drops. The numbers are out. The stock pops just a little bit. Futures positive by more than 1% on the S&P 500. Yields higher by 3 or 4 basis points on a 10-year to 295.22. Heard on radio, seen on TV. This is Bloomberg. Live from New York City this morning. Good morning on TV and radio. Here's the price action for you. Equities higher by more than 1% on the S&P 500. On the Nasdaq 100, up by 1.26%. Goldman climbing higher. 5 minutes ago, the numbers came out from Goldman Sachs. That stock is up by 2.75%. A big beat on trading revenue. Taking a deeper dive, a deeper look at some of these numbers. Let's get to Sonali Basak, our Wall Street correspondent. Hey, Sonali.
Let's talk first about the core ratios here, because you do have Goldman Sachs beating on return on equity, on its efficiency ratio, compensation and benefits expenses actually a little bit lower, a little bit lighter. And then also that big beat you see over at that fixed income trading desk, the star of Wall Street, right? You have 34% jump here year over year in fixed income trading, currencies and commodities volatility really helping Goldman Sachs out this quarter, helping them jump more than anybody else on Wall Street so far, more than JP Morgan, more than Citigroup by a percentage jump here. You have equities trading also beating expectations. Where did we fall short a little bit? You said investment banking overall, but the part of that business that still won out, John, is advisory. That is where Goldman Sachs is the rainmaker. They're the king of Wall Street in that business. $1.2 billion to bring in more than $1 billion of advisory revenue in a quarter like this is still pretty stunning. However, you were talking about investment banking. Where did they fall light? That is in those underwriting fees. And when Goldman Sachs projects ahead here, John, you are looking at them project at lighter pipelines, a decreased pipeline here when it comes to both debt and equity underwriting moving forward. That, of course, has ramifications, these lower asset values for their asset manager as well. You are seeing declines in the value of their equity portfolio and in their lending book.
Consumer banking. I think Mr. Solomon has some form of a affirmation here in Victory Lap in order, up 67%. I know you haven't had time really to look at it, but certainly it's not gloomy. It's consumer banking and nascent business starting. Are these guys going to be giving out toasters here this Christmas?
It's definitely a part of Goldman Sachs that has a lot to show for itself in the coming weeks, years, months. They're trying to strike partnerships all over Wall Street.
How's the Apple one going? I mean, you know the gossip here. You talk to Tim Cook
You
weekly.
have to move a little over to GM. They're trying to make partnerships with some longtime clients here and also capitalize on what that could mean for their lending book. Now, remember, a lot of the rationale from this early on was to lower the cost of funding for Goldman Sachs, diversify itself. But can they continue to grow that business enough to make Goldman Sachs a stable, less reliant ship on markets?
So John can buy the Hummer EV and finance it through Goldman Sachs? Is that where we're heading?
And perhaps one day buy now, pay later doing it. Who knows?
You're going to buy now, pay later something that big? Shonali, is that where this is going?
John, welcome to America.
That is ridiculous.
You know, I think the matter here is to be able to serve a lot of different clients in different ways. And that's what they're trying to do with the consumer bank. Listen, it's small compared to the rest of Goldman Sachs here. But to Tom's point, they are beating on expectations in terms of revenue at the very least for this quarter. They just keep on having to plug away and then answer those questions about the strategic direction. Goldman Sachs is trading barely at book value today. Morgan Stanley is at about 1.4 times book value. You're seeing James Gorman get a lot of credit here for pivoting the bank and making big investments. But can David Solomon command that same premium in stock markets while they're heading into a tougher economic environment?
Really busy couple of days for Shonali. Shonali, you're not done yet. What time's the call?
It is at 9:30, I believe.
There we go. Shonali Bassett will catch up with her a few times this morning, no doubt, on Bloomberg TV and radio. Tom, the stock's up by almost 4% now in early trading.
Nice pop, some real quality to it. As I mentioned, Mark, is the consumer banking thing doing better than good. Let's frame out a 2-decade through thick and thin return for Bank of America, Goldman Sachs, JP Morgan. I could have picked other banks as well, but I really think it speaks volumes. Bank of America, as I said earlier, up 2% per year. JP Morgan, stellar performance, up 11% per year. And Goldman Sachs, sort of in between, up 8% per year. And that brings us to Ken Leon with CFRA. Ken, who does Goldman Sachs want to be? Do they want to be a responsible blend like Bank of America? Do they want to be wealth management like Morgan Stanley? Do they want to be JP Morgan? Or as William Cohan wrote in The Great Money and Power, do they just want to be Goldman Sachs?
Well, Goldman's going to be Goldman. It's a great global franchise, but the second quarter speaks to your question, where the bank stress test separated those who are exposed to credit card, consumer loan, and commercial. They got really dinged and they had to build their capital buffers. Unfortunately, Bank of America is one of them. Morgan Stanley had huge dividend increases, and we saw it with Goldman Sachs today. So that's number one. Goldman wants to be more like Morgan Stanley, and actually those businesses are actually bigger. Consumer and wealth management offset the decline in asset management. And that is part of their strategy, is to expand to get the millennials early in the investment stage, and then they move into the more higher private bank. Now, the asset management business was down significantly, and yet they had an earnings beat, and that was on lower mark-to-market pricing. That's likely to come back in the second half of the year. I like the Goldman report today. I think it's a good one, and they do want to be more like Morgan Stanley to close that gap from 11 to 14 times PE multiple, or aspire to be like a Schwab that's trading in the upper teens. You have to have recurring, repeatable success with fee income, and that comes really from wealth and asset management.
Okay, so you like the report, Ken. Clearly the market does too, with the stock up more than 3% in pre-market trading. A lot of beats here. Let's talk about where they missed. In investment banking, those underwriting fees on both debt and equity. In the statement, they say that reflects a significant decline in industry-wide volumes. They also talk about a decrease in industry-wide mergers and acquisition transactions. And I'm wondering how you expect that environment to change in the second half and how the fate of these investment banks changes with it.
I'm not sure it's going to change. It may not be down 65% for the full year as the first half of the industry, but it could be 50%. And we go into the slow third quarter, which is really the holiday season, and you have an uncertain market in Europe, which is about 25% of their revenue in investment banking. So I think hard decisions may have to be made looking out to 2023. as it relates to staffing for investment banking. Those numbers are just not going to come back. You know, we came off the sugar high of the last 2 years of easy money, and I think possibly you get some improvement, but they're going to have to look at staffing decisions and expense.
Well, speaking of sugar high, there's a bit of a high on the volatility in this market when it comes to the big beats we have seen from trading, and Goldman not alone in that. Do you have to see markets continue to be so volatile in order for trading to be a ballast for these banks, considering you're saying that the deal-making environment isn't necessarily going to get better?
You never get rewarded for trading, and you cannot predict trading, but volatility serves well, especially in fixed income, currency, and commodities, derivatives. In equities, it's kind of lightened up a bit because we've moved from a risk-on to a risk-off environment for investors, both institutions and retail. So, but volatility is your friend, especially when you're a smart trader like Goldman Sachs.
Ken Leon, there's no one in America not planning to go to Europe, whether it's Paris, London, or wherever. Do these banks, maybe led by Goldman Sachs, are they going to surprise us with acquisitions in Europe?
I loved your comment earlier about Credit Suisse, you know, phantom banks, and I think they've been successful gaining wallet share, as James Gorman says, in Europe, taking all areas of investment banking. For these banks, Goldman, even today, you know, about 15 to 20% of the revenue comes from Europe. But Europe, you don't want to be buying these yet because Europe's going to be a frightful case going into the dark winter months with energy and Putin. So I would say they've been cleverly growing organically in Europe as the European banks, many of them, kind of wither.
Sounded pretty rough for Europe, that's for sure. Ken, just final word on the quarter. The numbers are in. Who won the quarter for you?
I think it's Morgan Stanley.
Ken Leon of CFRA. And Morgan Stanley, the winner of the quarter, Tom. Mr. Gorman again. How many times have we said that?
I've said this. I said it at Davos, John. I just think James Gorman is the executive of the decade with a major, major hat tip to James Dimon. Gorman had some real challenges to inherit, particularly in the trading side, the blow up of iterations of Morgan Stanley before, maybe Mr. Dimon would argue with me, but I don't think he had that challenge at JP Morgan. But I'm sorry, John, in the last 5 years, the real victory lap is Brian Moynihan. People have no understanding of the train wreck that was the cobbling together of the modern Bank of America.
I'll give David Solomon the final word here, Tom. Here's the quote from him.
Please.
Despite increased volatility and uncertainty, I remain confident in our ability to navigate the environment. You wouldn't expect to hear anything else, would you?
No, you wouldn't. And, I don't think he wants to talk to me because the first thing I'm going to ask him about is consumer banking. And yet the first bar chart I look at today is consumer banking with a very constructive pop.
Is that your pitch for an interview? Let's talk about markets.
No, my pitch is I just don't want to do the normal stuff. I really want to know the character of all these people. I've got to admit, is a blended question, John. I'm fascinated how they move July, August. I'm going to assume the last week of August is the new October as they right-size to go into next year amid all this uncertainty. They don't know what it's going to be like.
You wouldn't ask David how many rate hikes he expects from the Federal Reserve.
Yeah, I'm not a fan of it. You know that, John. You're busting my chops. Oh, look, the Dow's up 331 points.
Tom loves the interviews with the bank executives, up 1% on the S&P, on the Nasdaq up by 1.2. Tom, a quick look at the bond market. Yields a little bit higher this morning, up 3 basis points to 294.66. We might be light on economic data, but we are heavy on central bank decisions over the next week. We have the ECB and the BOJ on Thursday. Tom, next Wednesday. About a week, 10 days from now.
Seriously, John, I didn't see this weekend. I actually looked. Is there a published fragmentation theory or process?
We have a name, we don't have a description
of there's nothing.
How this is going to work. Thursday for Europe.
Is she going to sit there with a flow chart, with a pointer?
First rate hike in more than 10 years. They've got to try and tell us what this anti-fragmentation tool is actually going to do, how it will work. And Nord Stream 1 comes back online as well, and we've got no idea how much gas is going to flow through it. Tough times for Europe. How many times have I said that already this morning? Futures up 1% on the S&P. Goldman looking good. The stock up by more than 3% in the pre-market. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Bloomberg's learned that Bank of America is expected to pay a $200 million fine related to a U.S. investigation into the use of unapproved personal devices. That would be in line with penalties imposed on other Wall Street banks. Finance firms are required to scrupulously monitor communications involving their business. The fines rank amongst the largest ever. Russia's defense minister has ordered part of his forces to focus on destroying Ukraine's long-range missile and artillery systems. It's not clear how much of a change this represents. Russian troops have been trying for months to destroy Ukrainian weapons. Meanwhile, the US and its allies have stepped up arms shipments to Ukraine. And Swedish fashion retailer H&M has decided to wind down its operations in Russia. The company halted all sales there in March after Russia's attack on Ukraine. H&M will reopen its Russian stores for a limited time to sell remaining inventory. It expects to book costs of $190 million. The UK is bracing for a heat wave this week. Temperatures in London and the south of England might hit a record-setting 40 degrees Celsius. That's 104 degrees Fahrenheit. That is hotter than the forecast in Madrid, Rome or Marseille. All of the UK's 10 warmest years have occurred since 2002. A new report blasts the police response to the elementary school shooting in Uvalde, Texas. It says almost 400 law enforcement officials rushed to the scene, but poor decision-making resulted in more than an hour of chaos before the gunman was killed. 19 students and 2 teachers were killed in the attack. The report came from the Texas legislature. Global News 24 hours a day, on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
I think investors are better off for now in short duration bonds, treasury bills, 2-3-year treasuries. The bond market's not priced for the Fed getting to as high as 4%. And neither is the equity market. That would be a risk.
That's David Bianco, the CIO at DWS Group Americas on Wall Street Week over the weekend, hosted by Tom Keene and Lisa Abramowicz. And TK tuned in for that one. Great episode. Thank you.
It was great. You know, it was fine. It was good to go back. I wore a suit with wider lapels. You know,
beige. I saw it. The tan suit, nice.
It worked out, and you know they almost didn't let me on set, which was.
It's nice of Weston to give you the keys for a weekend.
Yeah, you know, David was at an oboe festival. He's a really good oboe player, by the way.
I know, Tom.
He's like gifted, and he was at some oboe festival somewhere. One of those Tanglewood things.
Is that just for a long weekend, Tom, or?
I'm talking to you. You and Weston are all on the same page.
Got no idea.
I'll
shoot him a message and find out.
Okay. Dow futures up 344, a nice lift, 1.1%. NASDAQ, John, seriously, John, this is different today. NASDAQ leads the way.
Well, I believe Critty's going to talk about it. We're fading the rate hike story from 100 to 75.
Critty Gupta joins us now. Critty?
Yeah, I'll hop in here. I mean, John basically said it. That is going to be the trade that seems to be going away, at least. I mean, last week, all the rage was 100 basis points was going to be the base case. That was at least the base case for the likes of Nomura and, of course, Citi as well. Now you're seeing that drop a little bit. And that brings me to my chart of the day, where you are looking at the odds of a 100 basis point hike in the month of July. So I think we've got about a week and a half till we get that decision. In just the last 5 days, you have those odds going from some 80% down to, well, 23% now. Now, the reasoning for this is twofold. On the one hand, you have that inflation story. Yes, the Fed still needs to go tough on inflation. At least that's the consensus. 9% CPI, 11% PPI numbers. But look, you also got some pretty strong economic data on Friday. Does that change the scenario despite the fact that you have strong retail sales and lower inflation expectations? The market's digesting it and saying, well, 75 seems more likely than 100.
Ian Lingen out with a 75 beep call here in a morning note this morning. That's important at BMO Capital Markets. Critty Gupta, thank you so much. The read of the weekend. The read of your life, wherever you live. It's simple. Laura Rame nails it, chief U.S. economist at FS Investments. Thank you, Laura. You wrote up where I went, which is the stickiness of rent. We all know this huge uproar in New York City about it. Williamsburg is a small enclave out to the east of Manhattan, and there was an apartment listed for a cheap $3,500 and went in a frenzy at $4,050. How do we bring down rents in America?
So this is one of the ironies of this Fed rate hike cycle. The Fed is actually, through raising rates, disincentivizing home builders in an environment where we have a shortage of housing supply. So I think it's very likely over the next year we continue to see rents putting upward pressure on inflation. And, we're going to get, I think the data this week is going to be focused on housing. Clearly, housing sales are going to continue to moderate, but this is one of the, I think, inconsistencies of the Fed's rate hike activity with their goals, and one of the ways in which they're kind of facing a different inflation demon than they are used to, not coming from wages.
This raises some important questions, and Connor Sen and on Twitter has asked this question too. What is the optimal way of using realized inflation data to make a forward-looking monetary policy decision?
To me, we are focusing so much on this monthly University of Michigan number, which in reality is so sensitive to gasoline prices. And so I think we made too much of it when it went up. We're making too much of it when it comes down. The market indicators are more contained when it comes to inflation expectations. But when we look at inflation right now over the next year, a bottom-up approach is really best. Not the Phillips curve dynamics that drive inflation over the long run, but really taking it apart. And when you do that, you do not have durable goods deflation. You do not have energy price deflation. It is virtually impossible to craft a story where inflation comes neatly back down to 2%. So much has to go right to get inflation to behave well.
Okay, well, one of those factors obviously is going to be the Federal Reserve hiking rates, trying to rein in demand, Laura. And the question really surrounds how much the economy and the American consumer in particular is going to be able to tolerate. And if you ask big bank CEOs, they're looking fine. We're just hearing from the CFO of Bank of America, Alistair Borthwick, saying the U.S. consumer spending levels remain high. They delivered the highest quarter ever for spending in the second quarter. They sound quite optimistic. How optimistic are you on the U.S. consumer?
I describe the U.S. consumer as resilient, and I think there's better foundation for growth going forward. I think the household, looking at what's driving household spending, a lot of those components are still there. But when you back out inflation, it's clearly crowding out other discretionary spending. So again, a place where inflation in and of itself is cannibalizing other demand. When you are looking at a retail sales number, it's solid, but you back out the inflation impact, real consumption is slowing. It's not in negative territory, it's not contracting, and that speaks to the resilience of the consumer. Because look at our economy versus a lot of the rest of the developed world. We're still in better, I think, standing. We still have better economic activity.
So, Laura, does that mean the Fed needs to do more?
I think they need to go fast to neutral, get there, and then they need to become more data dependent. They need to give these rate hikes time to work on the economy and not be so reliant on the models that are really constructed for, prior episodes where we don't have inflation coming from the disruption in supply chains, from all of the unique pandemic-driven inflationary factors. So I would be a favor of fast to neutral, even a little bit beyond, get us to 3%, and then take a minute and see how the data respond and realize that we're just in a very different environment. I don't think there's enough acknowledgement on that from the Fed.
Agreed. Laura, thank you. Laura Rain there of FS Investments. I agree, we're in a very different environment. If you think about how fast we've got to 250, how quickly we've got there, Tom.
Well,
in the last cycle, it took from December 2015 to December 2018 to get to 250. After this meeting in July, we'll be at 250, Tom, and it's taken how many months? 4 or 5?
But we're moving so quick, and this is the heart of the matter, John. We really haven't. I'm glad you bring this up. You're doing better than I am this morning. I had the mango tang. I can barely think. Amy, give me back the Lingen banner again. This is important. On radio, I'm going to read it out to you because Ian Lingen, John, is talking just what you're talking, that suddenly we are nearing restrictive territory. Is that really in the market, that flip from accommodation to something so rare?
How restrictive do they need to be? Just getting a correction from David Weston, Tom, in the inbox. He was not at an oboe festival. He's been playing a lot of golf, he said.
Yeah, well, he talked about it. We went back and forth, and, David and I agree. The Telemann in A minor, the sonata there, the G sharp in the second measure, John, you're in A minor, and you're thinking G, and you nail the G sharp up on top in the second measure. That was tough to do.
I'm not going to pretend I know what you're talking
breathing.
about. I'm not a musician, but you are, Tom. And David is too.
Well, this is great. I mean,
David Weston's taking back the keys to Wall Street Week.
You got that right.
But he might invite Tom to join his band.
Is that right?
No, he won't.
Have you ever been to TK's place? There is a guitar in every room, just lying on the floor.
Surprises me
And
zero.
just amps and cables all over the place. And there we go.
Stacks of books.
Yes.
Tang.
It's exactly
barrels
as you
of Tang.
would imagine it. Empty glasses and all of that. Futures up 1% from New York. This is Bloomberg.
The market is really risk-seeking.
Economic activity around the world and in the U.S. is rolling over a lot harder.
We think the Fed's going to have to move. They're going to hike until something breaks.
You need to run faster just to stay still. That's the challenge right now.
It wouldn't surprise me that we, see a recession very soon.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene on radio, on television. Forget about the summer doldrums. No, this week, most entertaining with the ECB meeting front and center. But before that, John, we have to reframe the Fed game with, a buoyant American consumer.
Sure. 75 basis points is the hike expected next week. For me, Tom, for others too, it was never about 75 or 100. It was about how far they were going to take this. Do they get out to 4% in the view of City, or do they have to stop well short of that, Tom, because this economy slows down?
John, is it two Americas? Ellen Zentner over at Morgan Stanley. Vishy's going to join us here in a moment. I believe it's a 0.9% growth statistic for Q4. How do you have that kind of growth? Or the consumer, the American confidence decline that Greg Valliere sees in politics with a buoyant market with day after day recently of a lift off the bottom?
I'll take your theme to Americas and I'll put it this way. There's two different ways of interpreting the data. Tom, you can do it in nominal terms or real terms, and retail sales at the epicenter of that last week. In real terms, the number not great. In nominal terms, the number really good.
Kaylee Lyons in for Lisa Abramowicz today. And Kaylee, John hits it perfectly. Inflation adjusted versus the nominal rate. And with earnings, we're going to see nominal revenue growth.
Yeah, we have to remember earnings season is still going on. We have bank earnings that are just wrapping up this morning now that Bank of America and Goldman Sachs have reported. But really, Tom, the theme throughout those that what we're hearing from the executives at these big banks is that the consumer is resilient. It's holding in there. Bank of America out talking about the highest quarter of consumer spending ever. That doesn't signal a recession to me.
Nailed it. That's absolutely perfect, Kaylee. John, this is the juxtaposition we have right now. A single line like that from a major bank versus levels of gloom that we have to consider.
But if you take the aggregate number on the consumer, it looks good. It looks resilient. You look at the disparity, and Bank of America and the research division have done some decent work on this, because at the moment, the lower income cohort right now in America are spending close to 10% of the monthly wallet, Tom, the income, on gas.
Yeah.
Yes, that might be getting a little bit better relative to the move we've seen over the last month, but that's been the story of the last year. It's getting harder, tougher. They're getting squeezed.
John, I'm going to let you quote equities so we're Dow free. What I would note, though, is oil with a lift, 103 Brent, in West Texas printing 100 just for a second.
We've got to bounce as we fade that 100 basis point hike story at the end of this month. Right now, futures high by 1%, outperformance on the NASDAQ up by 1.23%. Yields just a little bit higher today, up 3 basis points on a 10-year. That wasn't the story last week. Yields lower. We're back to 294.85, and crude up as well. Crude commodities getting slammed over the last month or so. We're back to 99.40 on WTI, Tom, up 1.85%.
And the VIX, I would note, we start the week under a 25. That's a huge deal from the gloom of, John, 32 was like the new 40, right?
Do you think it's the end of rate volatility? You'd have to make that call to say that the equity story is over, and I'm not so sure. You can ask our next guest.
24.82 as well. One of the wonders of losing money at equities is you quickly learn that fixed income is always and in every case out front. Vishy Tirupati lives this, Global Director of Fixed Income Research at Morgan Stanley. Vishy, what can equity players, stock market players learn from the Tirupati world of fixed income?
I think what needs to be focused, I think the equity markets need to focus on is what's priced in and how quickly price expectations of what's being priced in are changing. And I think we are in an extremely data-dependent world. and guessing the Fed's policy reaction function is something that we spend a lot of time on, and that's really where my focus is on, is thinking about what the incoming data and what that would mean to the central banks.
Shouldn't the reaction function, Vishy, be well established by now? What are we finding difficult at the moment?
I think it's in a normal circumstance. I think the Fed's reaction function could be more established. But we are in a world of dramatically, which is dramatically different. We've come from enormous amount of policy support to very fast and front-ended policy withdrawal, policy support withdrawal, and that's it's the kind of the kind of economic activity that we are seeing now is somewhat unprecedented. Just take last week as an example. We had very hot CPI print and the PPI print, and a so-so retail sales, and a very different print message from the University of Michigan data. So it's not an easy time for anyone, central bankers in particular.
Vishy, one feature of the research division over at Morgan Stanley, a team of which you're a part of, has been to downgrade growth expectations and increase the possibility of a recession. Vishy, with that in mind, let's tie the two stories together. At what point do you think this Fed starts to pivot towards prioritising output numbers, growth, at the expense of bringing back down inflation?
We think that until the end of the year, Fed is on a continuing hiking path. We expect in July to be a 75 basis point hike and a couple of 50s to follow, another 25, and we get to the Fed target Fed funds rate in the 350 to 375 by the end of the year. We think that's where Fed will take a pause and reevaluate as the data comes in.
Okay, well, there's reacting to economic data. There's also reacting, Vishy, to financial markets. Do you anticipate that things could get messy enough in credit that it causes the Fed to pivot?
I don't think so. I think in order for the credit market signals to become messy enough for the Fed to come in or change the reaction function, we think we need to see a spike in default or loss of access to capital markets to high quality companies, neither of which we expect to see in the near term. So the access is probably even more important. Access to capital markets remaining robust is an important consideration, and we see that remaining pretty strong. And if companies do not need to come to the market that much, considering the high yield market, just about 10% of the outstanding leverage loans and high yield bond market is due for refinancing over 22, 23, and 24. So that compelling wall of maturities is not that much that makes the job of the Fed from the credit signals from the Fed more muted.
Okay, well, speaking of high yield, I'm just taking a look at spreads. We're off the wides of earlier this month, 529 basis points right now over treasuries. Is that appropriately pricing the economic scenario that you and the team at Morgan Stanley are laying out?
We don't think so yet. We think that there is, even in a garden variety economic slowdown, garden variety recession, we saw in the past, we saw high yield spreads, 750 and above. You could make some argument that the quality of the high yield bond market has changed, so maybe slightly below that number. But we think the spreads need to be wider to reflect this, the slowdown in economic activity. We are not quite there yet.
Vish, you got a number in mind?
So in the 700 plus range is what I would say.
Oh, there we go. Vishy Tripatur there of Morgan Stanley, 700 plus. I think the wides so far the year are 580, Kaylee.
Stunning.
So that's an extra 120 he's looking for above the wides of the year.
Yeah, that's a good deal away, which could signal more pain in credit. But to his point, he doesn't think things are going to get so bad that there's any kind of Fed put that kicks back in. And that's the difference, John, is this is a Federal Reserve that probably isn't going to flinch at that, especially if defaults aren't as low as we've seen or aren't as high as we've seen in previous credit cycles.
John, what's the wides? Is that my waistline?
That's not your
what's the wides?
That's not your waistline. That is the extra compensation corporations would have to pay above the risk-free asset to get you to buy their risky debt,
What are you,
Tom.
Miss Bramble?
And how it would trade in the secondary market.
This is like a Bramble
And you would call the
conversation.
difference between the two spreads, Tom. And if they're narrow, they're getting tighter. And if they're expanding, they're getting wider.
Yeah.
So you would say the widest point of those spreads, Tom, would be
Professor
the
Ferro.
wides of the year.
Kaylee's been with us
He knows
so
all
much.
this.
Do we need, John, do we need a Kaylee cam?
A Kaylee cam.
I think we need a Kaylee cam.
Kaylee looks less gloomy in the morning, Tom.
Yeah, well,
than Brammer.
Kaylee looks less gloomy than everyone.
Just as annoyed about being on air with us, but less gloomy
Yeah.
about the world around us.
John, this is complete aside, and I've never
Sure.
followed the company. I don't have a great affinity for their profit
But
model.
tell us all about it.
Coming up, Netflix. I mean, from an American standpoint, is sort of the era we're in, John. This is not a normal earnings report.
It's not at all, but it hasn't been a normal earnings report all
but
year. I was just bringing up the earnings surprise from Netflix. The one-day price performance, as you were speaking, Tom, on Netflix. April 19th, the stock was down 35% after results. On January 20th, it was down 21.79% after results. And Tom, we've talked a long, long time, haven't we, about how many streaming devices we now have to pay for, the applications. Come on.
I mean, they've got Stranger, at home, Afterthoughts glued to it. She wants a name change. She wants to be called 12. I don't know what that means, but the Stranger Things is going on, and they got the new thing, John. I thought you were in the movie. It's the Gray Man. It's like a big, huge
What's
deal
that?
coming. It's like they're spending like $1 gajillion trying to, remake Pixie Dust.
Okay.
I don't know.
Netflix tomorrow, Kaylee, after the close, tomorrow.
Yeah, it's going to be an interesting one to watch, especially what the outlook is around that advertising revenue model that they're going to try and switch to. It doesn't actually apply to those of you who already have a Netflix account, though. It's new subscribers will have the option to pay a little bit less and have that ads in there.
What do you think of
as
that,
a
John?
result.
I could do without Netflix. That would be the one to go, I think.
Yeah.
I need live sports, so I pay up a lot for the live sports.
it's
So
a guy
I think
thing.
Netflix would be the first to go. Is that a guy thing?
Yeah, Netflix is Girl TV. Come on.
You said that, not me. I don't want to go there.
No, it
I've
is.
watched a lot
I'm
of stuff.
watching at home.
I've watched
This
a lot
is
of stuff
careful
on Netflix,
research.
Tom. Hulu is where the Kardashians is at, if you're interested.
I've tried to. I can't figure out how to sign up for Hulu.
I mean, I've watched the whole season.
John, do you realize tomorrow we have to promote the crypto show? Or you might as well come on?
Will you be around to promo that after your comments moments
That's
ago?
true.
I don't think Katie's going to have you back.
But Laura, how are you?
Futures up 1% on the S&P from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. A U.S. energy envoy is optimistic gold producers will increase oil output after President Joe Biden's visit to Saudi Arabia. Amos Hochstein told CBS he's confident there will be a few more steps in the coming weeks. Saudi officials say that any decision to pump more would be made within OPEC+, which holds its next meeting August the 3rd. In the UK, Sky News has cancelled the final debate between the Conservative Party candidates to succeed Prime Minister Boris Johnson. Sky said 2 of the 5, Rishi Sunak and Liz Truss, pulled out of the event. That's after last night's debate turned personal. Sunak accused Truss and Penny Mordaunt of socialism as he attacked their plans to cut taxes and borrow more. Conservative MPs vote today to eliminate one of the candidates. The International Monetary Fund said it will cut its global economic growth outlook substantially in its next update. That came after G20 finance ministers and central bank governors ended their meeting in Bali without agreeing on a communique. The IMF already downgraded its outlook for expansion this year to 3.6% after Russia invaded Ukraine. In Greenwood, Indiana, police say a man with a rifle opened fire in a mall food court, killing 3 people and wounding 2. According to authorities, an armed civilian shot and killed the attacker. The shooting took place at the Greenwood Park Mall outside Indianapolis. And Boeing has fired its opening shot at the Farnborough International Air Show outside London and announced that Delta Airlines will buy 100 of its 737 MAX 10 jetliners. The deal has a value of $17.6 billion, although there are usually steep discounts on big orders. Boeing's rival Airbus also expects to announce some big orders. Global news 24 hours a day. I'm Ritika Gupta. This is Bloomberg.
Every other currency is going down versus the dollar. We do have inflation. We have a central bank that's hiking rates aggressively, where some others are starting to blink. So the dollar strength will ultimately weaken our earnings, weaken our economy, get inflation back down, and support these other economies that need it.
I tuned in for that interview with Mike Collins of PGIM on Friday
Nice
morning,
of
Tom.
you. Great.
Great work. I think he called you John.
Great.
Just briefly at the start of that
did,
conversation. I know. I
that
enjoyed
happens
that.
a lot, John.
I was sitting on the
Walking down the
sofa,
street.
just loving that.
Walking down the street, John.
I get called Tom. Futures up 0.8% on the S&P 500. Who's more insulted? On the Nasdaq, up
Kaylee.
1%.
Kaylee, she has to be here.
Yields up 4 basis points, Tom. And Goldman doing nicely going into the opening bell. 1 hour, 12 minutes away. The stock's up 3.6%.
A little bit of a pullback on a 20-minute basis. Dow futures up 330, now up 279 as well. Right now, and this is a joy for Bloomberg to welcome Mondli Gugubeli. He's minister in the presidency of South Africa, but far more in the turmoil of American political economics, the upset of developed central banks, there is what is happening in emerging markets. We look at a prism today of South Africa through the experienced eyes of one of Mr. Ramaphosa's trusted advisors. Thank you so much for joining us at Bloomberg today. I need to go to the reality that our medical work on COVID came out of the Johns Hopkins University, and this was very much on South Africa. You have lived COVID. You replace a senior official who at age 62 died of COVID. How immediate is COVID to South Africa, and what is the COVID illness look like for South Africa in the next 6 months?
We thank you very much for the opportunity and your viewership. So far, so good. The last time I look, we seem to have everything tapering out or going down. I guess that's the reason we lifted restrictions totally in as far as COVID is concerned, and encourage people to actually keep on staying alert on the communicable diseases in the old traditional way. Although I've just heard this morning, which is during the day in South Africa, that we seem to have found a new subvariant, and it's something that we're going to look up to. But so far, so good. We are on a recovery course post-pandemic, dealing with the economy, which is even weaker than it was before pandemic, although we can say with confidence that the recent indicators have demonstrated that we are actually on the border of leveling up with the pre-pandemic situation.
From where you sit and with your nursing experience, when you walk in a room, you're the boss in the room on COVID. I can see that with your nursing experience. Is China getting it right, or is the Western world, is the United States getting COVID right?
We've been more focused at what we're doing at home. Yeah. And as far as I'm concerned, South Africans have responded very positively with regard to staying more alert than before COVID, knowing that epidemiological diseases are always a phenomenon to stay worried about. Access to water, clean water, keeping on washing hands, because the issue of virus is an issue that is not predictable.
Long ago and far away, a boat went around the bottom of South Africa, and it was a 5,000-mile trek to Sri Lanka. Now the images of Sri Lanka collapsing are tangible. You have a South African rand in disarray like many other emerging markets. How immediate is the food, the inflation, the economic unrest in South Africa? Is it something you're focused on urgently, or can you manage these challenges forward?
Well, socio-economic situation in our country continues to be a huge threat. Worse now with the global environment, in particular big economies like United States, having high inflation, which has got a potential spillover. But what encourages us is that the forecast of South African Reserve Bank give us a data in projection of about 5.7, 5.0, 4.9, 5.7, and 4.7 at the third year. In other words, everything is within the range in as far as the forecast of inflation is concerned. Nothing is above 6, as our range is between 3 and what we call and 6. And of course, the Treasury's projection outlook gave us 2.1 growth this year, which is expected to average at 1.8,
Right.
depending on consumer expenditure and so on.
It is a day to remember Nelson Mandela. You will travel from Bloomberg down to the United Nations to attend different events there in honor of Mr. Mandela. He was as anti-corruption as any of us have ever seen. You have an African continent riven by different levels of corruption. What can your government do to make South Africa be much more away from corruption and much more towards the practice of legal affairs?
This is one area we are seized with, especially in memory of his commitment to clean government, to prosperous humanity, to human cohesion. We've demonstrated, in particular when this president took over in 2018, take into account we were actually confronted with state capture for no less than 10 years. Mm-hmm. When this president took over in 2018, the immediate thing he attended to was to look at the prosecutorial institution.
Is it better now?
It's improving. It's not yet where we want it to be. That's why we are amassing energy within the public and the private sector, trying to work with the private sector to amass resources so that we improve procedural capacity. And the other issue is that Zondo Commission, which has been dealing with the state capture, this president did what is unprecedented. Mm-hmm. Did not edit it, just threw it in the website as he plans to put together an implementation plan.
Monday, we're out of time for one reason only. Your entourage is over there with a sign up saying, shut up, he has to go to the United Nations. Thank you so much, Minister, for joining today. Monday Gugulabelli with us from the nation of South Africa, representing, of course, always Mr. Ramaphosa. John?
On this International Nelson Mandela Day, Tom. Coming up, equity futures are positive 0.75%. We'll catch up with Ken Rogoff, a man who needs no introduction. And I'll bring you some news on Gazprom that just came out moments ago from reporting by Reuters. That's up next. This is Bloomberg. Live from New York City, good morning to you. Equities look like this, up 0.7% on the S&P. They fade just a little bit in the past hour. On the Nasdaq 100, up 0.8%. Off session highs, but still firmer. Yields higher now by 7 basis points on a 10-year, 298.55. That's a bounce back from last week's rally. Crude is positive by 2.2%, 99.75, and the focus very much on Europe ahead of a big day on Thursday for the continent. Euro dollar 101.22, positive 0.4%. That is a slightly stronger euro. This is the news from Reuters, Tom. Gazprom has declared force majeure on gas supplies to Europe to at least one major customer starting June 14th. This is according to the letter seen by Reuters. Some of this backdated, obviously, Tom. The letter said Gazprom could not fulfill its supply obligations owing to extraordinary circumstances outside its control. A trading source, this is Reuters reporting again, said the letter concerned supplies to Germany through the Nord Stream 1 pipeline. So in some ways, Tom, not much has changed here going into Thursday. Nord Stream 1, down for maintenance, set to come back online, and we've got to work out how much gas is going to come through it.
Exactly. An amateur hour here. I mean, if war isn't a force majeure, I don't know what is. But, you know, I'm speaking as an amateur here. John, this develops, and you've got to believe, I would suggest for Mr. Putin, it's almost to his benefit to get this out front of ECB announcements.
So, Tom, is it a reason to pull back on gas supply or an excuse because they've made the decision to do that regardless?
Who knows? The ambiguities of the moment. Right now, and always a joy, truly one of the founding gentlemen who have said, yeah, you can do this. Bloomberg on the economy, Bloomberg surveillance. Kenneth Rogoff joins us to say he's economics and public policy professor at Harvard, barely describes his public service to the nation, and of course, many years is the chief economist at the IMF. There's been a few books that people have been forced to read as well. I want to go, Ken, to one of the great algebraic books, the giant Wendy Carlin of the University College of London, with their effort on the 3-equation ISLM system. We have just had a natural disaster. We have had a massive COVID fiscal impulse. What does your world say of how we extract ourselves from a massive increase in the fiscal, a massive increase in debt?
Well, I mean, I think a lot of policy of the past couple decades, and frankly, a lot of the academic thinking and literature was predicated on we'd never have a war, we'd never have a big supply shock, interest rates would never go up, and guess what? Oh, and there'd never be inflation. And it's happening, and we have to make adjustments that people haven't seen for a long time. And I think it's going to be much harder than it was in the 1980s. The political environment's changed. The economy has changed. As you said, there's much more debt. The stock market's really high. People are very worried about inequality. It's going to be a heavy lift to try to treat this like a classic Keynesian demand shock.
Because of all the news flow, Ken, I have to turn to Obstfeld-Rogoff in your excellence at IMF, following on from Rudy Dornbush. David Folkert's Landau speaks of a dollar stronger. He nailed that along with others. And here we are. How do you actually weaken the dollar?
Well, the dominance of the dollar in trade and transactions would be there whether the euro, they're $150 per euro or the opposite. I mean, that's a given. But, right now there's this concern that no matter how troubled the U.S. is, there are other countries that are in worse shape. So it's actually, going to take a change. I think a lot of countries are having to react because inflation goes up when the dollar strengthens. But paradoxically, we don't get that much benefit in the United States from the stronger dollar because so much of trade is priced in dollars, but the rest of the world has to react.
Well, let's talk about different parts of the world then, Ken, that may be hit by a stronger dollar more substantially. Are we on the verge of a currency crisis in any emerging markets?
Well, currencies have certainly fallen. I don't know, exactly. I'd say currency crisis. We're at risk of certainly debt crises in places like Turkey and some of the lower income, middle income emerging markets. My co-author and colleague Carmen Reinhardt at the World Bank's warning that there may be banking crises, and all of that, of course, may lead to currency crises. And in principle, the movement of the currencies cushioning and preventing things from, falling apart. But it's very stressful. I mean, having your currency fall and having inflation go up and having to raise interest rates. So the position, you're quite right, Kayleigh, the position of emerging markets is really tough.
And do rate hikes from central banks fix that, or do you need direct intervention?
Well, I think they're going to do a mix of both. Rate hikes help, but a lot of these countries don't really have the kind of, frictionless capital markets that we have certainly, in the United States. And so they're able to intervene, but you can only do that for so long. The Asian countries have a fair amount of reserves. Other countries have some, but you can't do that indefinitely.
Okay, so I would like to move the conversation from fiat currencies to the realm of digital and cryptocurrencies. Ken, Tom was pointing out my required reading The Curse of Cash. You look at the future of currencies, and digital currencies have a role to play. And I'm wondering how you differentiate the idea of CBDCs, central bank digital currencies, a potential digital dollar, versus the broader kind of speculative assets that cryptocurrencies seem to be at the moment.
Not a simple question. I mean, I think at the moment, if you think about the United States issuing a CBDC, you have to ask why they're doing it, because we can accomplish a lot of the things the same way in the current system by making tweaks. If you did it too well, you had a retail central bank digital currency, there'd be massive disintermediation that we're probably not ready to handle. I mean, there are small central banks that want to issue a CBDC, hoping they'll get some of the kind of business that crypto gets. But it's very different, something that's going to be information that the central bank sees, and cryptocurrencies where the general idea is to try to make it expensive to track you. I think central banks are way behind the curve, and governments in general, in regulating cryptocurrencies. they throw out the idea of having CBDCs to distract the conversation.
But Ken, what's so important here to your very courageous book, The Curse of Cash, is the why. You and I are on the same page. We both agree, where is regulation? Fine. What is the why of the delay?
You know, I think it feels like the 1990s and early 2000s to me, when the financial system was inventing all these clever new financial engineering devices and saying, you know, catch me if you can, regulate me if you can. And I hear very much the same things from the, you know, young cryptocurrency pioneers. And there are a lot of ideas there, but they're wrong that they can't be regulated. But they're lobbying. We saw the Super Bowl, right, with 20% of the ads, cryptocurrency. There's states like Colorado and Florida, which seem to want to be the next El Salvador. They're giving away a lot of money to try to control the regulation. They complain about the SEC, so they're pushing back hard.
Ken, one final question. Is Japanese yield curve control, is that in the next edition of Opsfeld-Rogoff?
I think it's not, it's something that works like in a zero interest rate environment, but it can come back to bite hard. And I think other central banks who toyed with it have backed off. And as interest rates rise, Japan will have its own problems.
Professor, did you ever think that we'd have a central bank that owned 50% of the outstanding bonds, let's say the JGB market? Are there limits to that, Ken? In your mind, are there limits to that?
Well, in a way, there are no limits to it in the sense that central bank debt is owned by the government, and so it's just a way of issuing short-term government debt. But if interest rates rise and countries have very short-term borrowing, including through the central bank, they've either got to allow inflation to go up or they've got to start unwinding a lot of that. And if global real rates rise, and I think they will continue to for a while, we're going to see a lot of pain there.
Ken, we're lucky to catch up with you. Ken Rogoff there, the former IMF
Thank you for having
chief
me.
economist. Ken, thank you, sir, as always. This off the back of the great work from Seth Carpenter and the team over at Morgan Stanley, Tom, in the last week on just some of the numbers on the balance sheets between the ECB, the Fed, the BOJ.
Yeah, that bar chart. It's a bar chart out. I don't have it in front of me, John, but what's amazing about the bar chart is not over to the left, the ugliness of Bank A, Bank B, Bank C, obviously Japan. And there, it's the U.S. is way, way over. And it's a paragon of responsibility compared to
I know which bar
others.
chart you're talking about in the piece. It's when you compare the balance sheet as a percentage of GDP.
Yeah.
The BOJ is like 100, 120% of GDP. Tom, it's pretty wild.
I take great deference to these scholars like Ken Rogoff. And I've got a hallway at home, John, where, Vet Bill lets me down it every once in a while, full of books. None of what we're living right now is in any of those books, including the ones Ken's done.
Just one small correction by Reuters in their opening paragraph on this Gazprom story, just on the date change. They say Gazprom has declared force majeure on gas supplies to Europe to at least one major customer, according to the letter dated July 14th. They had said previously the letter was dated June 14th.
Oh, okay, that's a big deal.
And seen by Reuters
Big deal.
on Monday. A trading source, according to them, Tom, saying that country is Germany.
Yeah, well, there it is. I'm looking up Rotterdam coal right now. Folks, you can do that with the search engine of the Bloomberg Professional Service. Here on the terminal, and the answer is you bring up Rotterdam coal, which I'm doing right now, John, and let's see what the pop is this morning off Gazprom. And the answer is, 1-2 days, just a little bit of ebbing, waiting to see what Lagarde does. Frankly, waiting to see what the individual countries do.
Thursday is going to be fascinating for a number of reasons, that's for sure. Counting you down to that, Goldman earnings behind us now. We've wrapped up Wall Street numbers. Goldman looks good. The stock is higher. Futures up too by 0.7%. We'll catch up with Sri Sankaran and Morgan Stanley in the next hour on Bloomberg TV.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Bloomberg's learned that Bank of America is expected to pay a $200 million fine related to a U.S. investigation into the use of unapproved personal devices. That would be in line with penalties imposed on other Wall Street banks. Finance firms are required to scrupulously monitor communications involving their business. The fines rank amongst the largest ever. In the UK, Labour Party leader Keir Starmer is blasting the Conservative Party's economic agenda. That happened as the Tories are in the process of picking a leader to replace Boris Johnson. Starmer spoke to Bloomberg's Emily Ashton.
For 12 years of failure, and I think that any sense that the Conservative Party is the party of the economy has just been blown out the water. And if you look at the leadership race that's going on at the moment, you've got absolute fantasy economics going on. Hundreds of billions of pounds of unfunded spending commitments. So there's no way the Conservatives can claim that they're the party of economics anymore.
And Conservative MPs vote today to narrow the field from 5 candidates to 4. The UK is bracing for a heatwave this week. Temperatures in London and the south of England might hit a record-setting 40 degrees Celsius, 104 degrees Fahrenheit, that is. That is hotter than the forecast in Madrid, Rome or Marseille. All of the UK's 10 warmest years have occurred since 2002. The Russian gas company Gazprom reportedly has declared force majeure on gas supplies to Europe to at least one major company. That is according to Reuters, which cited a letter. Gazprom said it could not fulfill its obligations due to extraordinary circumstances. Global News 24 hours a day on air on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
The data we got last week suggests that core inflation is still rising well ahead of most people's expectations, and it's pretty broad-based. So I think it's premature to believe that inflation is really going to come down quickly.
Peter Oppenheimer, Goldman Sachs, a resilient optimist, even with a caution from Mr. Costa and the others. He is chief global equity strategist. Futures up 26, not up like they were 2 hours ago, but nevertheless, after a number of days here, a lift to the market. Kaylee Lyons in for Lisa Abramowicz. Mr. Ferro is on assignment, getting ready for his effort at 9 a.m. This morning. This is a joy right now, and arguably after Ken Rogoff, after the senior officer from South Africa and others, I'm sorry, this is the most important interview of the day. Marco Papik is chief strategist at Clock Tower Group, and what he does that is absolutely unique is fold in geopolitical strategy, which is his wheelhouse, into what are bonds going to do, what are equities going to do. And the distinctive feature of this is he has called bottom in June for the equity market. How do you get from a synthesis of geopolitics and, frankly, central bank analysis to buy equities now?
Well, I think the most important thing, Tom, is what's going to happen to oil prices. We had Jay Powell who told us on June 15th that he is focusing on headline inflation as opposed to core, which we have all thought was the key monetary policy instrument. And so what's important now is whether oil prices have more upside or downside. And in my view, there's more downside. And there's going to be a flip in correlation between equities and oil.
This is too important. Ed Morse, very much in the Marco Papik camp, says, here's the geopolitics. There's a tendency here to lower oil prices, 124 to 90 on Brent, 100 on Brent clearly says that. The other crew says there'll be EM demand that will keep oil sustained. Will that EM demand not be there?
Yeah, I don't think so. And I actually think the biggest red herring right now for investors is zero COVID policy in China. Everybody thinks once it's over, there's going to be this lift up in Chinese demand. And I'm worried that that's fool's gold. They are having structural, secular problems. They're pushing on a string. Households and the private sector in China is experiencing what we did in 2009, 2010. And so I don't think there'll be significant liftoff in EM demand.
Well, I'm just paying attention to headlines that are coming out of Reuters right now. We're all paying attention to Nord Stream 1 and whether or not that's going to reopen fully on Thursday. Reuters now reporting that the OMV expects work on Nord Stream 1 to be completed and says deliveries will resume after work completed. If gas is continuing to flow to Europe and prices come down, as you are indicating, Marco, what does that mean for the euro?
Well, I mean, huge liftoff, right? Think about it this way. During the euro area crisis, which was a moment when we literally were wondering whether the asset under question would even exist, the euro never came to parity. So I think there's been really sort of a pricing in of the apocalyptic scenario. The TTF contract, if you look at the December 2022 contract, is up something like 150% this year. There's a natural gas hub over there in Europe. So when you think about what's going on in Europe, I think the worst case scenario is priced in. But the problem for Russia is that while they're playing this game of chicken with Europe, 74% of their total end demand for natural gas is Europe, and they don't have a way to alternate that demand. Their transmission mechanism for natural gas are pipelines. They're nailed to the ground.
Okay, where else in the market other than the euro would need to reprice to consider that? Because the narrative seems to be that Europe's going into a recession. The gas issue may make it worse, but we're already there.
Well, markets discount the future 6 to 12 months ahead of time. I mean, at least that's what we all think. So I would say that when the economist puts under cover, the bear chasing Little Red Riding Hood through the pipelines, as you probably have seen this week, I think it's fully priced, the worst case scenario.
For Wall Street Watching this morning, and I mean global Wall Street, you've written about the nonlinearities of Putin and what we see in the war in Ukraine. Now we have some experience in a war. You polarize a stalemate or Moscow wins. Update us on that.
Well, I think that what's very important for investors to understand is that they're not looking at an engineering problem. So we don't know exactly how the war ends. But you know what other war didn't end? The Korean War. It's literally still going on. It's 69 years later. So all the market needs is a stalemate. And all it needs is a signal that Russia is satiated with Donbass. Because after that, market's going to discount future, worst case scenarios.
What does the DMZ look like on the new Ukrainian-Russian border?
I think that you'll have a line of control between Ukrainian and Russian forces. And while Ukraine will continue to be armed by the West, it's much more different. It's a different situation to try to have an offensive operation against entrenched Russian troops, which means that you have a frozen conflict for the rest of the decade. Now, what's important about that is not Russia, it's not Ukraine, it's not even the U.S., it's politics in Europe. And one of the things that I've emphasized is that politics in Europe are going to change if this war gets bogged down in Donbass. If Kiev, Kharkiv, Chernihiv, these big cities are not in newspapers anymore, European policymakers will lose the nerve. And so you will see a toning down of tensions between Russia and Europe.
Okay, so if it's a toning down of tensions, is it also a fraying of the really solid alliance that we have seen take shape in a real way in the response to the war in Ukraine?
I always thought that the sort of a transatlantic alliance, this idea that, we've rebuilt the alliances in the West, that was always sort of a spur of the moment. At the end of the day, U.S. has much higher risk tolerance to conflict in Europe because ultimately the backlash is happening in Europe. Europeans have much lower risk tolerance to that. And so, yes, I do think that there's going to be a fraying on the alliance between Europe and the U.S.
Marco, don't be a stranger. Wonderful to see you here. With Clock Tower today, Marco Papik joins us here. And I love the synthesis here, folks, of an optimism on the equity market into first-rate geopolitical analysis as well. Kaylee, I want to frame the week. I don't want to start with crypto. We'll get to that here on the backside as well. But Kaylee, to Marco's point, I'm sorry, greed on the screen is becoming a common phrase.
Yeah, at least as of late, Tom. We'll see whether or not this is something that actually sticks around or is just a bear market rally, as Mike Wilson over at Morgan Stanley has put it. And likely the earnings we get out over the next several weeks will have some influence. But there was so much conversation about the risk of recession, and yet the tone we are getting out of the banks, Tom, is overwhelmingly confident, specifically on the U.S. consumer. The Bank of America earnings call going on right now. Brian Moynihan, the CEO, saying the consumer is resilient, spending up 10% in the first 2 weeks of July.
Kaylee, I didn't know this. From an autumnal November optimism, Netflix is down 72%. I did not know that.
It's been brutal. I mean, a huge part of that decline came after their last earnings report in April. So it'll be interesting to see what the share price reaction is to those earnings tomorrow after the bell, given how far the stock
I didn't even know that. They're tomorrow.
Come. Yep. Netflix kicking off the big tech companies tomorrow. But the bulk of the market cap, Tom, will be next week when Apple and the other giants report.
Stay with us on radio and television. The close will be covering that. I am most sure on Netflix tomorrow. And then, okay, Kaylee, one comment here. 22,125 on Bitcoin. It's like Marco said about equities. It's the bottom.
Yeah, well, we'll see, Tom. Bloomberg Crypto tomorrow, 1 p.m. Eastern Time. Also the Bloomberg Crypto Summit. So tune into that as well.
I don't know. I can't go that long. I've got to say something. I mean, she did that was just a. I mean, that was a beautiful outro to the show. A complete Kaylee Lines plug there. And Kaylee. Here we go. Stay with us this morning on radio, on television. This is Bloomberg.